Maybe. Hello, good morning. See if I can get this setup going. Hang on. Discard. Okay. Good morning. So rebuilding a chart here. Morning. So I'm redoing my Russell 2K chart. So I want to see some things real quick. That's interesting. There. Mostly just gonna kind of look at, in the grand scheme of things, I'm just trying to see what these levels are and how quickly it's moved, and trying to see if this makes any sense for a channel. Because there's two possibilities here, and I find them to be both kind of possible, like compelling. So one is that this is actually in an ascending channel that's like a little bit steeper. And the other is the one that probably a lot of people are looking at, and that's this like much wider set channel here. And I'm not sure. This one seems like a better channel, but at the same time, I kind of wonder. So it intersected the bottom there. So here's my thought on this real quick. Maybe it's a little early for this on a Tuesday. It's the beginning of the week. So the markets are closed yesterday. I hope you guys had a good day off, good long weekend. This, I mean, unless you worked for like a, place that stayed open, I guess. I'm sure there's a lot of places that stay open on Labor Day. This one seems possible too, to me. All right, so like I had an IWM chart and I've been using it for a while. It got a little bit cluttered, so I wanted to clean it up a bit and focus on kind of big picture stuff. And the thing about trends is that while you can have a trend that, let's just say it transcends, it goes beyond and like through multiple ranges, which is typical. I mean, in some ways, like the trend is self-evident here because it's every time you have a move back to test some kind of support, that's part of the trend. But what's curious is that, at least on IWM, it doesn't have, I mean, SPY is a little neater because it kind of stays within a bound. But on IWM, there's kind of like 2 or 3 trends you could pull pretty easily. If you use the tops here, there's a decent argument to be made that we've already hit the top of the trend back in 2021, and maybe someone would argue we're going to come down and hit the bottom if we didn't already get that. I mean, what's odd though to me, I guess, is I'm looking at this like backwards, and I'm like, kind of looks like we already got there back in October 2023, because it's pretty darn close, and it's not like it always hits that before it continues. There's been 2 or 3 times we've had continuation without checking it. But the reason I'm looking at that is because if you go back to where the bottom actually is, ignoring that 2008 drop, it's anchored around 2002. And I've been kind of thinking about this because I was looking at historical data for rate cuts. And here's what everybody has said. Everybody has said that rate cuts lead to market correction. This is what I'm talking about, like generally, like people on the street, like people that I run across here and in the other group have said that you're expecting to see rate cuts and there to be some kind of a market correction. And what I found is that's not actually true. The only times that we've had market corrections that are significant during rate cuts, there were also outlier events. And one was 2001, and there was other stuff going on in 2001, but an obvious thing was the terror attacks. I mean, literally the, first attack on American soil since Pearl Harbor or whatever. That's a pretty big deal. That's a pretty significant outlier event. And number 2 was the 2008 crash, and that has to do with those crappy mortgages. And we all know that story because they made a movie about it. Every other time there's been rate cuts in the history of the market, and the Russell 2K is not by itself that old, it hasn't been established for that long, but if you look at the market on the whole, every other time there's been rate cuts, and that's like the remaining, like, I want to say it's like 14 out of 16 times, the market has actually done really well the following year. It's been bullish the next year. So it's I don't know where it's coming from that rate cuts always lead to like market crashes or giant market corrections. But that's not actually the case. I don't know where that came from. I don't want to call it fake because that makes it sound like somebody made it up on purpose. I think it's because these are the last 2 major examples that we may have been, like a lot of people are looking at. But in fact, even if there is a correction in the market, every other time there's been rate cuts, it's freed up liquidity, and ultimately the next year has been bullish. So if 85% of the time, that's a pretty significant number, y'all. If 85% of the time rate cuts lead to a bullish market the next year, I'm kind of wondering why, and it may just be because of just the fear in general of recession and the fear that has been brought up ever since 2008 continuously. I'm kind of wondering where that's coming from. So what I'm doing here is I'm trying to look and see where these actual bottoms are, and to determine what we might consider to be like and that doesn't mean that, like, when that statistic, that 85%, that doesn't mean that you can't get a rug pull. It's not like when you look at statistical data like that, there's always the outlier event. There's always the chance that this is the year, there's something different or whatever. I mean, but retail is so overcomplicated sometimes with their analysis. It just drives me nuts. Like every other day on here, and this is not a critique of any one person in particular, but just the internet. It's probably because the internet, you have so much information out there all the time that people grab everything and they put equal weight to all things. Like every piece of data has some kind of like drastic effect on the market. And I don't think that's true. I think that's very overcomplicating it. Like, and this is coming from a guy that's charts look like spider webs, Like I genuinely think that from a fundamental standpoint, Retail largely has overcomplicated it. And I was looking through those and I'm like, dude, I don't get this. 85% of the time after rate cuts begin, the next year ends up being a really bullish year. It doesn't make any sense to me. I mean, that's the real statistic. 85% of the time. That's crazy. So where is it coming? That's crazy to me. That's me looking up the data and like looking into it. So where is this coming from that every single time we get a rate cut, we're going to have some giant market crash? It's got to be these 2 years, but these are the ones that are like outlier events. I mean, and corrections are one thing, but a market crash is something completely different. And I think that the idea of like a market crash being this major event, there's no major event here based on rate cuts alone. Like there's significant things that happened during those 2 outlier events. I mean, it's not even, I don't know why you would draw that comparison and say that's what needs to happen. I guess that's what it is, Marky Mark. Like people are looking at this chart, but I got to be honest with you. The 2008 comparison, I did that back in the day, and back here in like 2021, and I did it with SPY, not with IWM. And even at the time on the S&P 500, I didn't think it looked like 2008. I thought it looked like 2002. And it looked like that 2002 correction that goes into the 2008 or 2007 and 8 period of time, then it dropped. It didn't really look to me like 2008. And time has proved that that was a correct analysis. Like, it did not look like the same kind of correction we had in 2008. Because back in 2021, people were using that comparison still. Like, they've been using it for the last 3 years. So I totally agree with you that that's the norm right now, is like everybody's expecting a huge market drop event. And I get it. And, you know, with war around the corner, you're always looking at those things like, hey, Booksy, it's just one big, you know, missile strike away from a market crash. And I'm like, sure. But that's the case all the time. Like, always. You know what I mean? Like, there's always the possibility that something happens that's an outlier event, like something you didn't expect. And to some degree, you know, obviously some people, not a lot, but some people saw that market crash in 2008 coming. But, you know, like the 9/11 terror attacks on the U.S. soil, I don't care if you want to put your tinfoil hat on or whatever, 99% of people would, obviously, we would say, like, nobody would expect that to happen. So, like, when you look at the overall picture, it's baffling to me because for 3 years, there's been a persistent narrative that it's about to crash. 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 And then the counter to that is, well, it hasn't crashed yet because they're just propping it up. It's the prop fund, you know. They're propping it up. They're propping it up. They're propping it up. They're propping it up. Okay. But again, it's like we're overcomplicating it. GDP growth is still growing. Like, it's still positive. It's not been the best it's ever been. Nobody would say that. But you're about to cut rates and free up more liquidity in the markets. I don't think that doesn't make any sense to me. Like, the fundamental truth of the market is that liquidity moves the market. Like, the ability to trade more propels the bull market forward. And it's whenever it's been constricted, such as when we started introducing rate cuts in 2022, boom, that we've had pullbacks. So it's really bizarre to me that I guess there's this idea that, like, we've had this huge market correction. It lasted like over a year. And I guess maybe the argument is like, well, it could be a giant like cat ear like thing, right? Yeah, I guess so. You know, I had thought about that for a while. Like, maybe this was going to do this kind of push up and then crash down here. And that was one of the earliest ideas that I had, again, because I was comparing this period back here to like 2002 and thinking it could be like 2002 leading up to 2008, like a bubble. But I mean, it's not really gone that way, like the way that I thought it would in terms of like timing. And SPY especially has soared past, that level. So maybe the Russell might still look like that's possible, but the S&P is not really in that position right now either. And I guess what I'm saying is like I don't see it. Like I understand where people are coming from that pull the data from all over the place and they're saying it's all kinds of stuff. All right, if you believe there's a domino effect and it's going to capitulate, that's fine. But the simplest truth is that when the economy has been moving forward and the GDP has been positive, markets tend to be bullish. The simple truth is that 85% of the time, rate cuts have led to a bullish year the following year. That's it. I mean, that's it. 85. I mean, it's literally like two events that have pretty massive ramifications that have been those examples that people keep using. And they're using those two examples as if those are like the milestone examples. Like, this is what's going to happen every time. I'm like, well, no. Like, not true. 14 out of like the 16 recent rate cuts has not resulted in massive drops. So I don't know where that's coming from. I mean, something like that. I was reading through and looking at all those different examples as far back as I could. I'm kind of summarizing my own findings on it. And I'm like, I don't get it. I just don't get where that's coming from. So I'm trying to like get a picture of like maybe like as we're building supports, what tends to happen. And this is a very unique area because this is more of like that U shape that we talk about. And I don't really like those shapes, of course. It does have that vibe of like, oh no, it's like it's chopping up. It's going to start, dumping back down. It may very well need to have another correction. You know what I mean? Like, and our correction might be a correction back down, to this previous range. Like, I don't really know for a fact. Maybe it does push up, and when it corrects back down, it only corrects to 215 or something, We may need to see a move back at some point before we continue forward. I don't know. It's a bit off in the future. Right now, this is one of the closest things I can see that actually looks like a possible cup and handle. The people always call out for cup and handles. This is actually one that looks like could be one. It's a very long-term bull. It has very heavy selling on the left, very heavy buying on the right. So if it can reach the top and then it creates what we call that handle over time, then yeah, I think it could rally and, advance, later on, 2026 or something like that. Sure, but this is not some kind of giant market crash. This is just corrective measure. So, I don't know. I think that there's this kind of underlying thought right now that it has to be a certain way. I just don't think that's true. So what I was looking at was possibilities for direction in this, and I think there's a general feeling that I have that this blue trend is probably the more dominant trend, which I think is pretty obvious. I don't really think it needs to be over-explained again, but there are other trends here because you did hit, like this is technically an acceleration because you did come below this kind of previous trend like we did in 2008 with the COVID crash here. It's a double bottom on $96, and then it resumes and it actually starts a more accelerated trend. So it's kind of interesting as I was thinking about like, I wonder big picture if we're really, as bad off as some people are saying, and I don't see it, I'm just not really there with people on that. So anyways, you guys are like, what about AMC and GME? GME rocketed. I know it did. And it's giving up a lot of it, which is fine. It's pretty close to what was anticipated for GME. And then AMC is just kind of slumping. I don't think it's a huge dump just yet. I think there's a possibility it's already kind of edging into its bottom. So I had a couple of possibilities for AMC. I'm not going to talk about IWM anymore right now. Just kind of started my day rebuilding a chart, so I wanted to touch base on that. So on the left-hand side, I've got a daily chart. On the right-hand side, I've got an hourly chart. So this was one thing that I was thinking could happen, was we would come down and maybe go into a spring. And on Friday, much to many people's dismay, I'm sure, I actually thought it would be better for us to not advance, but to do a little, not a head fake, but kind of, right? Do a little motion here and then come back down. Because this could be, and I think it is, this could be an auto reaction of phase B top, in which case you could have a very simple spring action. And frankly, this is exactly the kind of thing we want to have happen. Now, the only thing that you're going to like look at and say, dude, this is terrible, is probably the volume. You're going to be like looking at this like, look, man, it's huge amounts of selling. That's not really true though, because if you look at the, like invert the chart for a second and tell me what you see. There's a heavy amount of volume here and a heavy amount of volume here. And both of them are coming off like the same level. They're coming off that 486 level, which we already knew was the main like middle that we were trying to get below. So at first you might say, well, it looks kind of like it's just trying to sell down and knife down and distribute. I don't think that's really the case. Really what we have is a very light volume top, a very heavy volume bottom. That's good. You know that when we've had those heavy volume green tops, I've been kind of mixed bag on them. Usually I'm kind of bearish, frankly, because you don't want to see a heavy volume top, especially if it goes above a support, or excuse me, above a resistance and then comes back below. And the same thing applies to a bottom for the bear. You really don't need to see that as a bear. It's not beneficial to see a massive heavy volume that doesn't breach a level. So right now that level I think is about 474. And I think it could get down to 465, but I had hypothesized that this could potentially be it. It's kind of a strange thing to think about at this point because it's been so long and it's like every time has been it, right? It's like, oh, well, every single time has been the time, right, Booksy? And, you know, every time we think that it's it, it's not it. Well, again, I'm not going to put it beyond us at this point to say it couldn't come down again and even do another iteration. Yes, it's possible. It could be lower around 465. But if you're looking at the general trend here of these kind of bounces outward, when we started moving out this way, we generated what I called like a expansion instead of a compression. So we had been compressing up until about the 12th of August, and then we started jumping creeks. This was the biggest flub that we had, which was an apparent advancement that then failed, which is the biggest danger that we've faced. Much like what happens since July 24th, I guess, since that big push up, or on the 22nd rather, 23rd. But all the same, you know, one of the things we'd been looking at was, hey, if you do come down and you do finally finish, where is that going to be? So again, what's the most simple kind of thing that we've talked about this entire time for the last like 3 months, basically? Since May. June, July, and August, there's been one number that we've talked about all the time, and that's the 485 mark. The whole time. And that's never changed. It's gotten higher in terms of support. It's been slightly lower at times. You know, we've had the 490s up to 5, basically 503 has been a big major support lately, down to like 465. But even in that, when you look at where those are, that 503 is essentially like a 50-50 around back to 465 is essentially it's a 50-50 around 485. I mean, it is. So what's crazy to me is that even in the midst of like higher and lower supports, that 485 has still remained like a very, very important anchor. And the bigger argument, I suppose, that I've been making this whole time is that when we entered the range, it was specifically picked out. Who knows exactly how this mechanically works? Part of it was probably because of a previous engagement back here in the range at 485. Where that top roughly was back here was about 485. That's the most natural explanation, is that's where this supply was. So that's where I have a little blue line here going through the middle of the chart on the, that's the easiest explanation, right? It's where the supply was. And I don't think that's wrong. Okay, I think that's the simplest explanation. Another one is actually pretty interesting. It's where the 4-hour 180 is. Right when we enter this range, the 4-hour 180 is right there at 45, and it stayed there. It basically coasted sideways this entire time. They kept it essentially flat. It's slightly risen now, but essentially it was just flat, slightly rising. Another is the concept of like when we entered, where did this make that interaction? Again, we might just argue that it did this shallow S-curve and wrapped around 485, and it definitely did. We may just argue that that's the case because that's where the supply was and yada, yada, yada. I don't think that's wrong either. But there is an important argument to be made that is by itself a possibility just on its own, because for example, like the 294 middle back here, this didn't have like a previous support and resistance. This was a brand new kind of territory. And yet where this is chosen, yes, there was like a trend support, obviously, but where this chose to kind of meet that ends up being, where that middle ends up being. Again, I'm not saying like chicken and the egg, like it had to be this way or whatever. I'm just saying it's been that way since the very beginning. And so 485, I've contested this whole time, and I've said it, I don't know how many times, too many, right? That in order for us to leave on bullish strength, you have to take off from 485 in the end, because that's the competition. Like that's where supply and demand have been duking it out. That's where you have to kind of turn the tide, and either it becomes a supply zone again or resistance, right? And then you push down, or it becomes a support zone where your buyers are saying, we're not going below this. There's now stopping power, and then you push out. And in either case, you leave this range behind because you've already traded sideways here for 3 months. So you're either going to push away from this and go all the way up to 575 and then leave, or you're going to push away from this and go all the way down to 420 and leave. And I've made a case a couple times that that's what I thought would happen. When we came back up here, I'm not going to lie, when we came back up here, I'm not going to say like, I didn't say this. No, I definitely said it. When we came back up and we pushed away from 485 on August 8th, I genuinely thought that because the iteration had changed, and it did, I genuinely thought that, the compression's about to end, and it did. But I thought that, okay, at this point now you've hit that bottom. When we came up, I thought we might come back to 491 really fast and then just take off. Instead, what happened is we ended up enduring like a really long expansion that lasted like 2 to 2.5 weeks, and it never made that pullback till like way late. By August 22nd, I mean, it's like, again, like 2 weeks later, you're finally coming back down, and it's a longer-winded expansion. Like, it was unfortunately very slow, and there's nothing I can do about that. It is what it is. I would not have said at that time that I thought we were definitely going to come back down all the way to 480s again. All right, or potentially even lower than that at like 465 again. Were those always supports? Yeah, they were. 465 has been a support, arguably, again, since the beginning. But I would say the most obvious place is right here on the 16th of May, and then again on the June 4th and June 11th, and then one more time on July 24th. 465 is the most consistent bottom we have. when we did the PNF study, there are other bottoms. It's not the only one. There are a couple others like that kind of straddle it. 485 being one of them, 480s, and then lower around like it was like 440s, 430s. And they don't show up on the PNF. Some of them don't, but 460s ended up being the most consistent. I think there were like 3 to 4 hits on it. And so it becomes the most consistent bottom that we have in terms of this range. So if you're looking at what's the top, what's the bottom of the range, I think 465 is the strongest bottom that we have. So I've also argued recently when we started coming down that I did not think we were going to go extend significantly below 465. Then I was confronted with a lot of alternate TA, and people were saying that, well, don't you think it could go lower? Don't you think it could go down to like, low 4s or high 3s or? And all I could say about that is I just don't think that's where the floor is. Like a spring action goes beneath the floor. And so if your default is, I think the floor is way down here at 415. Well, I mean, if you're right, then yeah, a spring could potentially go all the way beneath that floor. Correct? Yes. So if someone said, hey, I think the floor is at 415, then yeah, of course, you could come all the way below that. If somebody says, no, I don't think so, I think the floor is at 430, okay? Well, then that's where you're going to be looking for the drop. Oh, I think it's at 445 or 450, okay? That's where you think the floor is, then that's where a spring needs to go. But like, I kind of made a case for it, and I feel like it's the best case that I could make. And I looked at liquidity, like where is the liquidity? What are the needs for liquidity? And the best I can tell, like 465 is the best level. Like, and in some ways, it doesn't really make sense for me to go any lower, like significantly lower, okay? And a lot of it has to do with the setup. Again, coming in, like where are we trading? If we're trading predominantly between 465 and 550, which seems to be the case, then that's where your range really is. And any kind of move above or below that at this point, we already know at this point that it's probably going to be a spring or an SOS kind of deal, right? Like one or the other, or a UT, you know what I mean? If you're going up in a distribution. When you look back, this range itself is a little bit of a nebulous kind of range as well. It doesn't really feel super strong. It feels like it's all over the place to some degree. But just generally speaking, I think you would say it goes from about 465 to 410. So I'd ask the question about this to folks that are saying it goes significantly lower. And that is that you've already had 1, 2, 3, 4, 5, 6, 7 dips below here. And my question is, like, why would it look good to come all the way to like 4? Because to me, that's not the range. Like this lower yellow portion is not the range. This region from like 465 to 410 isn't our predominant range right now. Our dominant range is up here. And a lot of that has to do with the fact that the selling climax happened on like the 31st of May, and then immediately we come back up, and where do we trade? We trade higher, and we dip lower. And like, look at where we are now, and I would say, yeah, it seems to me that we're trading mostly, again, between 550 and 465, not this lower area. This doesn't seem like to be the range to me. So the argument that was made that I gently kind of was like, I don't agree with it because of liquidity. It's like, why would you do that? I don't know. I really don't know why you would do that unless you're going to go ahead and sell all the way down into the 3s and go for that gap. Like, I genuinely don't know why you'd pass below a previous range if you set up a range higher. It doesn't make sense. It's not jumping. It's not going into a spring at that point. For me, it's like, no, that's kind of a breakdown. Because if the floor is at 465, you could go a little below that in a spring, But like to drop beneath 430s at this point, that to me is like the center of the previous range. If this were any other stock, any other situation, if you dropped below your range and went below 50% of the next range, I would not call that a spring. I would call that a breakdown. Like it's not beyond its range. It's now deeply embedded in another range. What about a terminal shakeout, Booksy? What about when it just sells really hard and then it rebounds? The problem with a terminal shakeout is you can't predict those. Like, I don't think anyone can really predict those. And frankly, like when they happen, it's kind of obvious while they're happening that you could be in that situation because you see the acceleration and the volume pour in and it gets crazy and it's dropping like a rock. But there's been times where it's done stuff like that and it has not rebounded in the way that a terminal spring action would. It's just a massive sell-off. So for someone to predict that to happen, it requires a lot of nuance. And the only time I've successfully predicted those kind of terminal actions is when I've been able to see, for example, like back in June 24th, when you can see the little iterations like building. So you can see them becoming smaller and smaller and smaller. The stock doesn't do that unless it's kind of exhausting a direction. But if it's just like a giant sell down, and if this were to sell all the way through 465 and just kept dropping and went all the way below 430, 440, I mean, yeah, it could be a terminal shakeout. That's one of those things. Like we've seen that happen before on AMC, and it's like, hey, and I've said it before, hey, if this doesn't recover in a terminal move, like where it comes right back up into the range, it's bad news. And I'd have to say the same thing about that. So I'm not of the opinion that the liquidity need is here. I think we've already traded that 430s range. We've traded it previously before coming down. We dipped into it, 6 or 7 times. At this point, if we're dipping into it again, I would think it's probably because there's a problem and like the liquidity is going the other way. I've made a case frequently that this is bullish because of that, because of the frequent dips into it and it's rebounding every time. And it is kind of pushing downward. We're not getting like the creek advancements, but that's the nature of often of a spring and like a phase B. You end up trying to advance, but you can't. And so it drives the price low until you do advance, and then all of a sudden it moves up all the way back to the top of the range, right? Passes through everything. And we've had only really 2 major opportunities where we've seen that as a potential. One was right here on August 15th, and then the second was on August 27th. And those were the only 2 times that I felt like we had a possibility because we were advancing over a creek and trying to push, and we did. The second time, push resistance, which is why I was like, well, that's not good because it pushed. It's going to have to come down to, and it didn't hold 503. So it's going to have to come down to the 470s, and it did. And I'm not saying that to stroke my ego. I'm just saying like the laws of supply and demand are there. I don't care if people believe that they're real or not. The ideas that I'm presenting you guys with those kinds of thoughts about liquidity, they're old school thoughts, and it doesn't have to be more complicated than that. Like if it works, it works. So I'm looking at this like, what's the liquidity need here? I don't care. You can disagree with me. It's up to you, but I don't see it. Like I just don't see it. I can't make the argument for you if you think that the floor is not like 460s at this point. It doesn't make any sense to me. So if you're wondering like, well, what do you think about so-and-so? They think it's going to go down to here. What do you think about so-and-so? I don't know. I don't think anything about them. They've got their own opinions. I do not have any kind of strong opinion about them as a trader or anything like that. It's purely just, I don't think that's where the liquidity is. I don't think that's where the range is. I think the range is built out above 460s. I don't think it's below there. So it doesn't make sense for me to have a dive unless you're just selling through. It doesn't make sense for me that we would come below 430 unless it's just like a terminal action that immediately responds by breaking out. I'm talking about immediately going back up to like a breakout 520s at this point. It just doesn't make any sense to me otherwise. So I'm of the opinion that like there's a range here and it's not, I don't know, it's not that wide. It may seem like that's obvious because, we've been chopping sideways. Well, of course, we've been just chopping here forever. Yeah, but it's basically, this is it. I mean, this is kind of like where the range is. The area that we've been in since the early parts of July. I mean, this is essentially like the same area we've been trading in. We traded here as well a couple times before that in May and June, but this is the range. It's not down here. I genuinely think that's actually the previous range, and that we've already been doing a lot of big dips into it. And the fact that we've been trying to dip low unsuccessfully, and I'm not counting extended trading hours. Some of y'all are like, yeah, but back here we went down to like 415. Yeah, I know, it went all the way back and like tapped the bottom basically of this previous area during extended trading hours. I can't comment on that. It didn't happen during regular trading hours, and during regular trading hours didn't go below 430s again. So at this point I'm like, look, to me, like, that's probably the center of the previous range. I don't think we want to see it dip below that. If you're just looking for like bare minimum, like how low can you go, it's probably as low as I'd be comfortable going. And at this point, I don't think it's going to go significantly below 465 again if it's strong. So that means, you guys are like, whoa, that was a lot, Booksy. Why? Why'd you do all that? I thought you were going to talk about a spring. Yeah, because I am. Because that means that the spring area would be between like that 485 and that 465 region. You know what I mean? Like, or you'd set up for it there at the very least. That's the place that you would find that final like stop. Like, if you're talking about where the bulls are kind of drawing the line, it should be here. I mean, and that's always been the case. Like, we were looking at this previously and seeing higher supports build out until about here, right, where it started coming back down. And then it opens the door on like, this wasn't that long ago now, like a week ago or whatever, late August, where it starts opening the door for, okay, well, we're sliding down beneath supports again. Opens the door for lower moves, you know, potentially. And we did do it, but only after we got like that up thrust. We were building higher supports, but no matter what happens, like, that still was the area that there would be a desire. You can kind of see that desire to attempt to trade here, and we just haven't really been able to do it, you know, since June 27th. The trading's been extremely fleeting in this area. It's been in and out very, very fast. This reminds me a lot of, again, what happened in May. In May, there was a region much like that was not heavily traded once the range was built out. And it's this area that ultimately had that LSPY, and it's the 485 equivalent. It's essentially like right on it or right next to it where that drop off happened, that little middle liquidity area. And back in May, that region had some dips into it, but again, it was like 1, 2, 3, 4. There were just a few that were attempted, and it was mostly higher highs, but at the end of the day, like, it didn't really trade sideways, and it never really traded heavily sideways there again until, you could say maybe May 2nd. I think that's the equivalent of what happened here on June 28th, essentially, And the rest of this was just an attempt to kind of drive the price back down to get back down to that liquidity. And I think we're seeing a very similar story here. It makes sense. This was the creek jump, right? So when we were talking about driving the price back down, it's not just, it's a question of like, we need to come back down and retrade this area. It's part of it. But there's a creek here that was leapt over, if you will. And then we did the same thing here. There's a creek right here that was like leapt over. And we're trading downward across it. And ours has been a huge, huge chopping area as opposed to this one. Here's where things get kind of interesting. So if you're kind of like, all right, I get all that, Booksy. It's a big wave, up, down. Understand that. Down is where the floor is. We've established that that's where you think the floor is. You think it's around the 465. And that's why you were comfortable saying that it could come down to 470s and have a spring area, spring-like area. It's near that 485, which you've been harping about for a while. So what's this micro range right here? Why do you think that could be it? So again, I'm not saying like timing wise that I know that it has to be now, okay? I think there's a possibility that, again, you could end up with another kind of micro version of this, like between 473 and 465, for example. I think that's a possibility. But here's what happens, and this is why I was really bullish the last time we went up, okay? And it's not exactly the same, so don't look at this and say, oh, it has to be 1-to-1 perfectly. It's not, okay? But this is basically what happened last time and why I remained really bullish. I had bought calls before earnings because I was like, man, this range looks really good. I'm really bullish on it. I bought some on the 8th. I bought more on the 9th when we dropped down, and actually got out of some, I had a very small put position. I got out of that put position on like the 9th or 10th after that drop because I thought, it could drop again into like a more of a real bottom here. But here's where things are kind of interesting, okay? So this particular setup, I've shown you this before. So if you're looking at this, you're like, hey, I've seen this before. Yeah, I know. This is the kicker, really. So in the grand scheme of things, what this is a very, very bizarre looking kind of Wyckoff setup. It's a simple accumulation, right? So there's an auto reaction, and there's an auto reaction that has a support, and then essentially it goes into a phase B top, and then it has a phase B bottom, and then a spring, and then it just leaves. Okay, it's as straightforward as you can possibly get. All right, and that's essentially what happened here. It's really straightforward. This is also the same thing you see in something like the 2020 bottom, right? Which is, a lot of people still say, oh, this was like a really random event. Well, why does the range, when you go back on, why do you look at the range and go back and you say, well, this range also happened to be like an accumulation range? If it was a supposedly super random event, that was this big squeeze, why is there a 10-month accumulation before this random event? You know what I mean? Like, clearly, if it were random, it would have looked like a complete change of character. I digress. My point is that that's a very similar comparison as well. So you can look at that one. They all pretty much have the same pattern if they're like that, because it's just like a Wyckoff range. There's also I'm on the 30-minute. There's a divergence here that's pretty significant. I think I saw it first on the 15-minute when it happened. That divergence is pretty big deal because obviously the price is coming down, making new lows. You can see it in the setup too. It's kind of interesting because this makes a spring, but the spring is almost non-existent. I mean, I think on my chart, it doesn't even look like a penny, more than a penny difference, but it definitely wicks lower here. So it does make a divergence because it comes lower and below that floor. It's really similar to the 2020 bottom. The 2020 bottom also did that. I'm talking about the one before the gigantic move in 2021. And that dip was like a penny or two. It was super small. It does come down, double bottom, and then makes a quick dip. And that's where you get the creek jump. So again, this is just a very straightforward, simple Wyckoff spring. Why am I calling it a spring and not just a range? Well, it's a spring in that where it happens, right? It's pushing that floor again. And you may again argue, well, I don't know if that's a spring because it made a higher high than the previous part of this bigger range. It's really more like an LPS. Yeah, it is. But in my thinking, there's not really any difference between the two anyways. Because the point is, both of them is the same, which is you're driving the price back down to instigate a buy up, to shake out weak hands and to get ready to move. And the only difference between the two is that an LPS doesn't have enough ammunition to drive it all the way below some particular range level. But it does drive it below some support level always. So it doesn't really matter. Like, it's going to push down until it can't push down anymore. And we talked about like the basketball underwater kind of thing. You know, the more you push, the harder it is to hold on to it, right? The pressure, and then the greater the release. So, you know, if you push a basketball underwater halfway and it pops, it's not going to go that high. If you push it under 2 feet and you let go, it's going to go flying when it hits the top, right? The same concept generally apply to a spring. The buoyancy, it's this idea that you're pushing against that downward pressure until the pressure release. And it's not that complicated. It's pretty straightforward. It's a almost an artificial kind of move. It's a manufactured move, right? And it's strange because, again, volume doesn't come in Wyckoff until the end. It's always like, you always think that there should be like a ton of volume then, right? If it's pushing down in this dramatic way. Not the case. Like, there's definitely always a heavy push up and then a heavy sell off, like, which is what we saw here, right? But it always goes up before it goes down. That's true. But there's not necessarily like a huge amount of volume, because smart money is not interacting with other smart money at that point. Like, they're interacting mostly with retail. So smart money would not be engaging in the move as much as you would expect them to. Like, it's really about just getting to that point where you've kind of reached the pinnacle, right, of the move, the farthest that you can go comfortably. So I look at this and I'm like, all right, there's a basic structure to this. It seems pretty straightforward. Are we meeting the same criteria here? We possibly are, yeah. Like, it's not, again, it's not impossible. And I don't think it's out of the question that we do this again, like lower. I kind of have this drawn really high. I don't think it's impossible or out of the question that this is going to happen again. And we may not see anything this week. And people are going to be like, yeah, well, it's a short week. You know, nothing's going to happen. Well, it's a short week, but the week isn't short on a Friday. And there's a difference. So a lot of times I feel like there's a kind of maybe it's a bit of a both thing, but I do think there's a difference, because when there's an early weekend, the narrative is that people are checking out early. But when the weekend you're coming off of is the one that's the long weekend, it's a little different. So like Monday we had off, but the rest of the week is just like a normal, like we don't have people going on vacation on Friday, right? People are back. So I don't necessarily expect this to be a bad week just because it's a short week. Does that make sense? The narrative of like people leaving early or whatever, or checking out early, that doesn't really float on weeks like this. So that's my thought. But I guess we'll find out. So do I think it's possible, Booksy, that it's still going to have this kind of second move and yada, yada, yada? Yeah, I mean, it's possible. But I'll tell you this, right now, I definitely think it's a possibility on the basis of what we've seen so far that this could be like really positive. This could be basically the same exact kind of setup here that we're getting. And it's just not out of the realm of possibility. Like, it looks very good to me. It looks like a potential Wyckoff bottom. Like, it looks like really straightforward in some ways. It has, oddly, you know, RSI wise and stuff, kind of the similar vibe as what we saw back here. Really similar in terms of that. I don't know if you can see that as well as I can see that, but really similar. Like, I know this is a 30-minute, this is a 15-minute. Maybe I can make it both 30 for a better argument. There you go. Really similar vibe in terms of that move. There are some differences. Like, this made it like more of a double bottom. This is a slide in. So again, maybe we could argue that there's a difference in strength or something or whatever, but I also don't think that every setup has to look exactly the same. So I don't really care that much if it's like slightly different, unless it's different in critical ways. I see it though. I mean, it's there. There's an auto reaction here, and then there's a phase B top. And then it's basically, this is what I was saying on Friday. I said I kind of would prefer it go ahead and come down, because this could indicate that we're entering into that. I'm not going to make this like the only option here, but we're entering into that potentially that bottom here. There's a heavy selling volume right there, and that sell down back in on May 10th. It's very similar in that regard. It really is. And just, take it for what it is. There's definitely some slight differences, but it's there, it's essentially the same thing. I think it's very possible this is the bottom. And like I said, there's another possibility here, which is there's another iteration that needs to happen. I think it's even very likely that that is the case. But that next iteration is going to be really small. It should happen. So I'm going to get rid of the RSI. You can tell, hopefully, what I'm seeing, that RSI is really similar in the build out. You are already almost back down to the previous lows here. And the RSI is still really high. And that's what we saw back on May 10th. I hope you see this. You guys are like, I'm reading through it. It's saying AMC looks really boring. That was 9:45. Well, maybe I've changed your mind a little bit. Do you see this similarity in the setup? So we've got a phase B top. There's a couple things that I'm willing to concede on, I suppose, with this one. And that is, again, this reaction is very high. So one of the things that's kind of challenging about this is where does that release happen? That's what somebody's saying. When is that going to move? Okay. Well, this is the simplest way to understand it is if this is a phase B, then you basically have a wedge in this case. You've got a narrowing that goes down until it breaks out. And so do we have that narrowing? Not really. It's more of a trend down. I don't see it as a super strong narrowing action right now. So what you'd be doing is looking at the creeks and where do you jump them? And this is lining up with a bigger one. So again, it's well, maybe big picture, there's more to this. Maybe big picture, this whole thing is a auto reaction phase B. Sound familiar? Hey, you said that last week, Bugsy. Yeah. So strangely, as you kind of move outward, you start seeing that this is potentially, again, I know we talk about compression. You're I'm so sick of that. Well, we got to remember, every one of these left side iterations that built up is now doing a right side to some degree. But oftentimes the first right side is one of the first ones that is going to come back down in order to get to a particular goal. And this has happened frequently. So we look at that and then this one, and you're well, what's just going to keep going? It could. But usually the point is to get to that initial goal. So when we look at this now, big picture, you're well, that could be an auto reaction and a phase B top. This could be a really long-winded middle. Yeah, it could be. Auto reaction, phase B top, going down. Support, spring, right? What? Yeah. Totally. And I was saying that last week that was kind of the only thing I could think of. And when I thought of this as a good thing, if I were to say, hey, this is a good thing, I said maybe it could be a phase B top because the only explanation is that's a sell through and you're going to die. Basically, you're going to nosedive. But if it's a phase B top in this range, potentially it's okay. This would be a giant auto reaction with support. And then an S big, long S curve that jumps a creek into a phase B top. Now you're going downward in what appears to be a giant wedge into a spring action. This would be a phase B support right here. And then you would go into some kind of a spring below it, which is what I'm suggesting, when I say it could go down again and iterate lower. But what, Booksy? I don't think it necessarily has to because remember, these springs don't have to go significantly low. That's not a thing, okay? In fact, a spring that goes too low often isn't a spring at all. It's people, I'm not very good at judging those things, but again, I always talk about Stockfather. He had ways of determining, it was usually, again, that rule about 50% through the previous range. Once it gets too far, it's not a spring anymore. Springs don't transcend ranges like that. They go below support until a certain degree, and then they'll stop. And this could be very much like that as well. You have a potential here that this is, again, this is your phase B support right now, and it's right at 474. So in theory, and I don't think it's a bad theory, in theory you're getting a little micro auto reaction here. You could have another phase B top right here, and then you could iterate again. You're like, no! But you could. It could be really straightforward. And honestly, it could just stop. Now, it's possible, and this is where I don't like fractal analysis, right? You know I've talked about this a lot. It's possible that after this point, we have to kind of concede that, like, well, we don't really know sizing wise, like how small these iterations have to get. It's definitely a possibility this doesn't do what you think it's going to do. There could be like this moves too high or something, and then it drops through. And then you end up doing it again, this thing again, smaller, down bottom. But I think that's all possible. But it's also very possible, if this doesn't do that, that it's like what happened here, and you basically just get a little dip below 472. Like, that could be enough. Like, it really could be. So I genuinely think that this is on the precipice of a potentially huge reversal. It looks bad to everybody. It doesn't look good. But the setup here is pretty clean. It's got the divergence set built into it. It needs to get the dip below for the proper spring. It needs to jump the creek. So if it were me, and I'm looking at this right now, and it is me, I am looking at it right now. But if it were me, what I would do is, I kind of eyeballed this, but I think it should be out further. I would make a mark from the top on Monday the 26th through the little peak here on the 30th. That was like an hour before close. And I would watch that and see if that jumps here. If you get another version of an iteration down low, just like this one, you may not see it, but it's there. It may not be very obvious, but it's there. It's right here. There's actually another whole range set up. It goes up, does a little auto reaction, pushes up again, and then comes down again. And if you do a micro version of this way down here, down the 292 area on May 10th, you'll see it. It's a whole nother one of these. It's another layup that then drops. You would expect it to do the same thing here, but we may have a little bit more visibility on it at this point because we're watching it, and it's easier to see it happening that way, because this is a 30-minute chart. So this obviously was really small. This was only a few candles. This is a 30-minute chart. There's a lot more space. So we've got room, to do some more stuff. That's what I was saying. It could be that my sizing is a little off with this, and we may still need to do another one lower. And you're like, well, how low can it go? Again, I don't think it goes below like 430s. The way this wedge is built right now, you could compress all the way down to the 440s, but that's pretty low, And I've already made an argument this morning that I don't think that it's going to go significantly below 465. So my thought is that if it were to do another iteration, maybe into that Friday, under this Friday coming up, that we might see it do some kind of a drop. You may end up at like 450 or something. And that's about as low as I would expect it to go, period. But that's considering this is the floor, and ultimately on the big picture that this is like a phase B into a spring. That would be very fast. So I don't know. We're not there yet. We'll see how the week progresses. Probably we'll know by like tomorrow. I think today we should be able to see what happens. Today into tomorrow, we should be able to see what happens right here. So what happens after that, Booksy? Well, it's very similar to what happened in May, because if it's bullish and you're right about it, then the resulting action should be a creek jump followed by an SOS and a backup. There's three motions. So first is the creek jump here. The second is how high do you push into an SOS kind of motion. And then the last is the backup. And then the continuation. finally, after all of that. All right. Now, the way it happened in May, it's so fast that you really can't barely see it. I mean, it all happened in like a couple hours that morning after all that gapping and stuff. But if you were to break it down into the parts, you'd see that they're all there. It didn't skip any step. It just happened really, really fast. So the first was the creek jump. So this was the creek at the time. The creeks jump, so you leave the local creek behind. That's the one that was in this tiny little compression range. So this is like the ball has been released and you're now pushing back above the water. Second is you pop above the top, right? And that's what happened here. There's an SOS. And then you back up to that creek. It's not always necessary, but it's usually a healthy sign. It usually means good things. So I think at the time, I said it was like 320 or something, like, because it was the previous top. It came below that to like 316. But I said it would need to SOS and then come back down to like 320s. And the way it happened, by the way, last time, I wouldn't have predicted it ever to be that fast. So I was thinking like, oh, it comes up, does a little SOS, comes back down, hits 320, and then pushes back up again. And I remember talking about 320, like that's the level, you know, it has to come back and hit that. And it dropped below that, hit that creek, and then took off. And I was like, hey, this is good, you know, like really solid. The rest of it is just completely beyond me. Like, y'all know that, you know. I had the targets, did not expect it to get there in like 2 days. The point being is that if you're expecting something similar, you could look at it like, oh, it's going to do the exact same thing and be this massive rapid fire move. But that, again, that's timing, and it's really hard to know with timing, you know, what to expect. Instead, what would be wise would be to use what we do know about this setup. So one would be a creek jump locally, and then we would look at the bigger creek jump like we did here on the big picture. We'd look at an SOS and then potentially a backup if we need it. So that's the markers for success here. So when you go through all those motions, you're like, well, that's good. The setup might be really positive. Potentially you have, you know, an attempted break here. Yeah, you know, I think that these creeks have been well established at this point. It's pretty easy to see where they are. If we pass above 491 again, we're back above the creek. So like an easy way to understand this right now is just simply to look at this as like, hey, we're pushing down, we're underwater. Let's see what happens. If it breaks back above, it levitates. Much like the other range, you know, I picked 320. I'd pick a few levels here that I would suggest. One is that 491, because that's been acting as a resistance. But interestingly, come tomorrow around noon, that's going to be the place that if you break above it, you're going to be back above this creek. So once you get past tomorrow around noon, 491 is a really solid one to use. So that would be like step one. If I had to pick this up into pieces, right, I would have it be a breakout here above 491. Maybe it comes back down to like 490 or something. That doesn't really matter that much. Just has to check the creek. So it's a local SOS. Jump the creek, local SOS, back up, advance. Next one, there's an intersection right here around 511. That's basically like what I would suggest to you guys could end up being the low, which is why I don't think it's out of the question that we actually do end up going down this week. Because it seems very possible that you could kind of belly out down right there. But that's where the pivot is, and so it's important to note, like, that's where these creeks switch places. One is on the bottom right now, and it's about to be on the top. You're going to cross both of those in a bullish action. You have to. So the next action, in this case, is, again, pretty easy. It'd be roughly going up to, like, 530, probably come back down to, like, 509, and then advancing again up to about 565. You need to breach 550. 550 would be like the wraparound level. This is where that magic happens for the SOS. So now you've got pretty simply like a simple, I mean, it is easy. You've got 491, you've got 520, and you've got 550. You know, if you're going to pick those levels, you're going to be pushing above those, coming back through them, hitting the creek support and advancing. This is it. There's nothing else here at this point. So until we get to this point, we don't know exactly where that backup needs to be. So this will be kind of tricky because I don't know how high this goes at 530. Maybe it goes up to 535. Maybe it goes to 530. No idea. All right. Don't know yet. Not there yet. I will say this though. Once it gets up there, you should have some indication of like where that creek is. And that's going to be like a higher resistance. So you've pushed up resistance here, and then you're going to have, so wherever this pushes up to, that's what I'm trying to say. If it gets done pushing up to like 535 and then coming way back down, cool. That's now where that resistance is. So in the event of a backup, you know, that's where you go to. But I can't know that for sure, right, till we get there. Okay, and by this point, you guys are probably looking at the chart like, hey, that's FOMC basically. Yeah. Yep, rate cuts. So is it possible that that's where we are around rate cuts? Yes. This is interesting because even though I didn't do the iterations correctly, I guess, the outpouring iterations, I had a chart that modeled us into the SOS and the backup at the time of rate cuts. It's definitely a possibility. Well, Booksy, couldn't all of this happen like super fast? Yeah, I mean, it could. So if it were to do it all in one fell swoop, you would push up all the way to, like if this were like May, for example, it would be like us pushing all the way up to 566, coming all the way back down to, I mean, it'd be crazy, right? Coming all the way back down to like 5 and then just like taking off. You know what I mean? I'm going to put it over here just to demonstrate it, just so you can visually see it. Yeah, I mean, it would be a significant move from whatever bottom. But that's, again, it's like, how could you predict that? I don't know. It's just your opinion of like whether you think there's going to be that kind of a force involved in it. I think this happens if the goal is to get you to, instead of here, instead of the SOS, perhaps, you know, I know this is a lot of speculation, but if you were thinking that, hey, I think by the time we rate cut, we're already like halfway there. That's another thing that I thought originally. Then I think that it's very possible that you could be up in the 8s and 9s, and this would be a much faster way to do that, to see that acceleration very quickly. So a lot of you are going to be like, well, when do you actually expect to see that push out? The only thing I can tell you with any kind of, I don't want to say certainty, but maybe like a more high probability is this. This particular cross section right here, which occurs on Thursday this week, a cross down, that would indicate to me a potential place for a pivot low, not high. So like, the only reason I'm saying that is because of, and I hate to do this, I would do this like every single day, but I should just keep one of these in my back pocket or something. It's just this concept of waves, and it does apply. I mean, it's not wrong. It definitely works. The problem is that it's not an exact science with charts because they don't look perfectly like a wave. So like typically where that cross down happens, if you have an ascending trend and then a descending trend competing and you've broken below them, that's where you end up with the low. So like this typically would delineate roughly where the bottom of that wave is. Why are you saying it's not an exact science then? Because mathematically it's an exact science, but in the world of charting, this doesn't usually ever perfectly pinpoint the low. Like, because your bottom is not typically like this beautiful bowl shape sine wave. It almost never is. In fact, the bowl shape doesn't usually look good. It's not a good look for us. Usually this is like some kind of a massive like pivoting thing. So it may not even look right. You know, it might look like, hey, that was where it's supposed to advance. Well, in the end, like it proves itself to be right, but the way that you get there, it's like, well, that was the middle of the wave, right? but it ends up being much more like this. And so you look back on it and you're like, hey, that didn't really indicate the low. No, it didn't, you know? And that's pretty typical, but did it accurately indicate where the middle of the wave was? Yes. So I could say right now with some amount of certainty that, to me, the most high probability center of the wave is around September 5th, 9:30 a.m. That to me is not really a big deal, and I don't think that's wrong. I don't think it's going to change. I think that's where those creeks are presently. And really, if you look at it that way, it's kind of like anything goes surrounding that area. So if I were to make an estimation on timing, I might suggest that we use some kind of a, I don't know, I guess you could use some kind of a trajectory in, trajectory out model. Like that would be another way to estimate timing. I already kind of did that. So I've got a wave cross right here. And this could be a trajectory in if it ends up hitting this low. So if it drops down, for example, tomorrow to like 460 and then it rebounds, that could end up indicating like that's where the low trajectory is. Oh, excuse me, that's where the steepness is on that. I don't want this to have an alert on it. I already got that. So maybe 61 degrees. Yeah. So this is a decent estimation of potential timing on a wave. It's not like perfect science, but it works. Most of the time it's pretty accurate because the in and out trajectory tend to be fairly similar on a wave. And it's true in the market as well. It's not it's not an exact science. So to me, it would suggest that, again, potentially around that FOMC date, you would be more likely to be up at 550 on the 16th. And it is right there on the 16th. That's assuming that this made another drop down, which it hasn't yet. That's about the best I could give you in terms of timing. It's just symmetry, essentially, in the wave motion. Did this apply to the May 10th example, Booksy? I don't think so. It didn't. So I can't, if it goes faster, there's nothing I can do. I will say that it generally doesn't go slower if it's going to accomplish that goal. If it ends up going sideways and slower, it's either going to be like a slingshot where maybe you move away from, maybe you do spend a lot of time down here, you move away from that and then it slingshots back up. Or frankly, it's just breaking down. It's not following that trajectory at all. There's not that many other options. So I'd say it's a good estimation of timing, and it's probably the best that I could do right now for you. So we may have 1 week here. It's very possible. We could have 1 week that's kind of sluggish. I wouldn't be surprised if we ended at 5 again this week or 450. And I'm sure that there's max pain out there, people that are like, it's 5 again. Yeah, it wouldn't surprise me. The only way I could see this being like significantly higher is if it's a rapid fire kind of thing. But to be honest, if it's going to do that, I don't know why we wouldn't just run, because this doesn't make sense to like pump up, come back up, and then just sit here for another week. It would have to be kind of like taking off. So at that point, the trajectory is null, whatever, So in terms of this, as the crow flies, if this is the trajectory, you can decide if you think it's there or if you think it's here. It doesn't make a huge difference to me. Whenever this hits a low, you could use this trajectory, and it's just going to give you a general estimation of roughly where you're going to be when. And that's probably the best that I can do for you now in terms of timing, as I think it's the most accurate way to do it without just frankly guessing. I've not seen a much better way to do it. I'll just put it that way. And the trajectories tend to be the most reliable to me for timing purposes, if you can get the wave in trajectory. But you guys are like looking at May like, I don't know. Yeah, I know. I don't know. Maybe that does happen, You could see a huge Wednesday move. This could get a spring today and just rip tomorrow, and it's all of this is out the window. I don't care that much. My point is to just illustrate that this is definitely a potential bottom. It's definitely got the markings of a potential bottom. It could have, again, more iterations down. That's a possibility, but it's also very possible that dipping below 473 is enough, and that's all that it needs. I'm inclined to think we're going to get to the 465, but we're not there yet. What about GME? What about it? What about it? So, I don't know what this garbage is. Market news things. Yeah, I don't know what to tell you just yet on GME. So, it's definitely pumping pre-earnings. I got to say, there's been news, there's been some news catalysts for GME. They announced a few things. One is that they discontinued a line of credit. That's a big deal. So they basically were saying we don't need it. We don't need the credit anymore, which is good. So that's like if you pull out a credit line on a bank, it says, oh, you can use up to $10,000 or something. You potentially that counts as a liability against you because you're basically saying, hey, I'm gonna be pulling from this and creating debt, essentially. And they discontinued it. They said we didn't need it. They probably could have done that earlier because they had raised like $2 billion or something. And the line of credit was like hundreds of millions. It wasn't that much. That was one of the big news things. And then the other one was the retro game stores. So unless they've got another news thing that they announced, those are the two that I know of. The retro game stores were basically retrofitting, but essentially it was going back and taking certain store locations and turning them into what they call GameStop Retro, which is a store that predominantly deals in older games and game systems, not brand new stuff. And the reason they did that is pretty obvious. There's a huge amount of demand for nostalgia. It makes sense to me because most of the stores that do pretty well in my area anyways, that are not GameStop have a lot of older games. They're like kind of trading posts essentially, and a lot of them have older retro games that you can't find anywhere else. And that's like early generation games. It makes sense to me because GameStop for a while, the reason they stopped doing that, they've always had the trade-in things, but they only ever keep like one generation behind or like high demand generations. So like you might see a GameStop that's big and it might have like a section for PS3 games and Xbox 360 games even, you know what I mean? But that's about as far back as they usually go. Wii or whatever, like that's it because they run out of shelving space. So it makes sense that they could have dedicated stores that do that. So they discontinue a line of credit. They have these retro game stores. There's your excuse for the run for those that needed it. We also had you guys are like, well, we all needed it, Booksy. Maybe. But it's there, it is what it is. We also have what I think is a clear attempt to kind of back up to a support and double dip below 2050. We talked about that as it happened. I said that, in my opinion, 2310 was the level to beat, and that we stopped there for that particular reason, and now we need to kind of push above and build support. So my analysis was that we'd get to 2310 and then probably push up to about 25. We didn't quite get there. We got close. We got 2467. So for now, I'm like, it looks good, and I had hypothesized a couple routes here. One was really low, in which you come back to fill the gap at 2050. I don't think it's impossible. I don't think it's as likely, but it's not ever impossible. And never say never in the market. There is a big jump here that was made that we advanced pretty far. If we were to come all the way back down, it would put us back near that gap. So it would be pretty ugly sell down. I hope that doesn't happen. That's all I can say about that. You guys are like, that's not very comforting. No, I know. And some of you are like, that's never going to happen. Well, I mean, I didn't think we'd come back to 2050 again, but that happened, you know. So you always have to look at those older support levels and think about where it could go if it came back down. I do think that the creek that we attempted to jump here right around that 2310, when that started kind of failing, that creek has been passed at this point. And it was at that 2220 level. I said, watch that last Friday, and it took off, I think, before the end of the day. I remember coming back and being like, wow, man, it's really going, you know. So certainly coming back down to that creek, you know, as it goes into earnings, that would be like 2196 around earnings if it were to come right back down to that. So you could just say 22 if you wanted. That's a possibility, you know. There's no rule that says it can't come back through 2310. It's just that at this point, I think that's probably the most critical level that I have, and I think it's the most important. So I've got a couple thoughts for earnings. One is, again, a pretty significant backup to a creek, which could be, I mean, frankly, it could be as low as the way this jumped. It could be as low as 2050s. I mean, it really could. It could be essentially like a double bottom down here. Another is about this higher creek, which I think is a more middle of the road kind of approach. And that's probably a better approach, is around 22. I think that's a possibility. And then the strongest approach, which is, in my opinion, just again, holding that support, would be staying above 2310. And I don't really care what it does as long as it kind of makes the right moves here. Interestingly, on this other chart that I've got, I don't know if I did this wrong or what. I've got this one's like significantly higher. This one looks right though, so I'm not sure what I did. It's a different time frame, but it's supposed to be higher up. Maybe I just eyeballed this one, and that's probably why it looks wrong. I bet I did. I bet that's why it looks wrong. Yeah, it should be lower. I don't know. I actually thought it would kind of coil up in this little pocket here, and so I had drawn this little M shape that you see, and it's basically just like indicating a high accumulation range. I'm not sure we're going to get that far. Obviously, the timing of this would be a little off at this point, but because of where it is. But weirdly, on this chart, it looks like it hit that line. It looks like it met the top, or it got really darn close at that 2468, 2470 level. Oh, it hit that 2470 marker. Well, that's good. Yeah, that makes sense. Okay, so I think it's possible that it already kind of tested that trend. I'm not really sure why it looks so different. Yeah, I don't know. I don't know why it looks so different on this other chart. They're not that different time frames, so I'm kind of confused. I don't know. Anyways, point is, this is kind of where that wall is. So if I were looking at this as a, like, where are we now kind of thing, like in terms of a range, I would say it's between this ceiling at 2470 and then this floor at 2310. And that's about as much as you need to interpret. There is another little micro support at 2350, and we are interacting with that right now. Maybe better just to look at this as like, again, I feel like that $22 level is going to end up being the one. I know I'm talking about 2310 like it's a magic number, but I'm sitting here staring at my own chart like, I don't know, man. It looks pretty straightforward. It looks like the range is between 2470 and 2232, and that there's a middle right here at 25. So we've already created that interaction here. You can see the resistance and then support, and then resistance, support, resistance, support. So you can see those markers pretty clearly. So I don't know. 2310 is important to me. I think it's really significant. But it could just be that we set up a range where you're dipping below now in order to find support. I'd still like to see that support above 2310 before it's all said and done. And that has to do with the big picture analysis that I did a little while back. I'm not going to go through it all again, but I'll say this, that once you get above 2310, in my opinion, this region, if you don't think it's that precise, you think it's a little bit bigger. Some people have said slightly higher. Some people have slightly lower. Here's why I think we're all kind of right, because it is a range. It's not like a single line. I picked that line because I think it's the most important one. And I think there's markers here that make it the most important one. But I also think that I would concede to you, and I would say that really if you look at 26 down to 23, that whole area right here was the top. And it isn't illogical for someone else to say they think it's a higher, like they think it's 2470 or something. So looking backwards, this is the reason why I think this is so significant. Because this is the middle, essentially. You can see 26 is really like that, the center of that LSPY kind of in the center here. But this is where that big pivot happens, right there in October of 2022. This is where the big M shape happens coming down. And so once we break out, you look at this as a giant picture. To me, this is like a big, like bottom structure, like almost like a W, like people like those shapes. This would have been the push up right here to 26, kind of tops off right around 2310, drops, pushes back above, consolidates above 2310, between 23 and 26 here, and then it drops below again, finds support. So if you can come back out, you should get another push up. It's that simple. It's like that's where the floor essentially is. So I don't think anyone else is like completely wrong about that if they're looking at this and they're saying, I don't think it's 2310. I think it's 2496 or something. Like, cool. Like there's two key levels here, and there may be even three. And I'm totally good if you don't think it's 2310. I wouldn't argue with you. I would say you could be right. These are more flexible because it's a big area. It's just that delineates kind of where that important support is. You're not going to advance unless you can build support over this little wall right here. You see that on the big picture? So right now we've dipped below. We didn't break the creek here, right? We dipped below that support, which is the very definition of like a spring action, right? And then we've failed to come back above it at 2310. That's why I think it's really important. So we did come below it. We rejected it. We came back down. Now we're above it again. We need to find support on top of it so we can continue. And that's where I'm at presently in this current time frame. So when you look at the big picture, yes, there's other possibilities for where we could end up around earnings, et cetera, et cetera. But there's a very clear couple of creeks here that I think you should pay attention to. One goes from that 12th and 13th of June through the 18th of July, that topping action in July, 17th, 18th in July. That one is really important because it's intersecting where we are currently. All right, so it's like pinch point, right? So you've pinched into this little corner. You're essentially trying to build support over 2310, which is the bottommost support here. And that's the one that we dip below in order to cross the creek. Very good for a spring action to do that, or a bottoming action to do that. Okay, if it can manage to find that support and push up, I don't see why it wouldn't just take off to the upside. It's like really hard for me to imagine why it wouldn't. If it does reject here, or it has like a head fake above like 26, or for example, and then came back below 2310, yeah, I mean you could be in a very simple like motion that is a distributive motion that then slides really low. This is where folks talked about 17. That's how you could get to that. But I think it would be an up thrust first, which has already happened. Like we've already moved up. So I made that case earlier that I didn't think it would just continue dropping straight down. And it didn't. Because it's a liquidity question. I mean, and you can see where those markers are. They would have to prove this is supply. And they didn't really do that. So right now we're in a bit of a tight spot between the two. walls here. Love you. Beyond this, anybody's guess, right? But this is a very significant level for me. So when I look at this, that's what I'm going to be paying the most attention to, I guess, coming up into earnings is like this little pocket right here to see if we can hold it. I don't really care if it doesn't go significantly higher at this point. I think that this is the range you want to be in. And ultimately, if it comes back below, if it did do that, I would prefer it be like, again, kind of like a spring action maybe, you know, where you kind of see it drive low. Maybe on earnings it dumps down. But it just goes back to like near 2250 or something, you know. I would not want it to lose this level significantly. So this to me would be my ideal situation. You're like, why not just keep going? As I don't think that that's ever ideal. Like, I know it sounds weird because a lot of people love to see like just rips that just keep going, but it's better to sort of prove it out, like to have it moderate and find those supports before you move on. If it doesn't do that, you're always at risk of just full on crashes later, which happens on GME and AMC quite a bit, doesn't it? And it's like, if you don't mind riding the waves, you probably wouldn't care that much about it. But if you want to see consistency and you want to see longer term moves, like you need to build those supports. So I would prefer if we went lower again, we would kind of test that 2310 and keep that as the floor. And then at lowest, maybe that 2196 area if we needed to dip down. So I don't really care about, not that I don't respect the guy, but don't really care to know what RK is doing and all this other stuff. I know some people really like to keep tabs on that, but I just think that's kind of like it's inconsequential to me. Like it's a catalyst event, I guess, but it's like anything else. It's always there when it needs to be there. I never feel like it's always that bad. So yeah. You feeling more bullish on AMC today? You were on Friday. Yeah, but I mean, I don't know if you guys remember, but on Friday I said that I thought coming down would be a more bullish action, like coming down to 480s again. So I did not want to see it come up here, back above the top. That would have been a more, to me, like coming up high on Friday at the end of the day. I think I left like 2 hours early and I said, there's still 2 hours in the day. I don't know what's going to happen, but I really don't want it to come up above 497. There was a lot of reasons for that. I mean, one is really obvious, which is that it would have been above the previous top. So it would basically be at risk of being a UT or UTAD potentially near the end of a day, which is not good. On a Friday is not good because then you don't have any confirmation. You'd just be left wondering the whole weekend. And I said that would be kind of the pits. Another was that it would jump the creek. And so again, it's like, talk about distributive actions. You don't want to see that kind of a big last minute push unless you're going to see support. So my argument last week was that this, had it continued, would have been kind of, in my opinion, like a more dire situation. And I didn't really want to see that. And I said, I thought what would be better is to have the reaction and then kind of come back down end of day. And that's what happens. I know I left the day kind of uncertain because we were right here in the middle. But when I came back later, I thought it was great. I think I went straight to the Discord group. Everybody was like bemoaning the move. And I just flat out said, I say everybody, it was really like one person, but like one person was like, this is horrible, AMC sucks. And I'm like, it looked really good to me. Like that's actually what I said. I said, it looked like a really strong finish to me. I would much rather have come down Friday and retested this floor, and that's what we did. I just wasn't here live when it happened, but that's the first thing I went and said. I genuinely went there and I said, you can go find if you're on the Discord, you can go find it. I said, looked like a really good finish for AMC. And y'all are like, what? You know, some people are like, what? Why? It went down. Yeah. But that's what TA gives you. It gives you a perspective on things. You know, down can be very, very good. Very, very good at times. And up can be very, very bad at times. It really depends on when and where. And in the case of Friday, I did not want to come back above 496 again. I hate that kind of motion on AMC. And I don't say hate in like a mean way. I just mean like it's awful. Like there's no good, in my opinion, there's no good interpretation of those kinds of moves. Because it's either that it's going to gap up and just be some massive breakaway gap, or it's always the opposite, which is just this horrible UT where it's an up thrust. They didn't find support. They just pumped over the resistance, and then you end up selling way, way, way low. But coming down, you have no risk of that. None. If anything, you're going down to test a support at this point. So it's like, to me, like that downward motion was way, way, way preferred. I would much rather stay in range and go down and test a support on the end of a Friday before a long weekend than to do some dumb, like, you know, asinine up thrust that you have no idea. And then you're waiting all weekend to see if it's going to actually hold. And then the only people that are excited about that kind of stuff are the people that think every day that it's going to gap up after hours. And I'm like, I don't want it to gap up after hours. When has that really ever been good? Once? Twice maybe? Really, the only time that we've seen gaps to the upside be good are when they're massive breakaway gaps. There has never been another upside on AMC, upside gap, that isn't like a massive breakaway. We're talking about like huge, huge, huge volume that hasn't come back to bite us. Not all gaps have to be filled, but the way this operator has played the game, they leave those signposts unless they really don't care to go back. But that's very rare. It's like never happened, you know. Even the ones from the 2021 massive move got filled. I've made the case before, and I'll make the case again. There are moves like that happen during a markup phase that won't be filled immediately. And I will always make that case. Because again, that 2021 markup, especially the area from February of 2021 through May of 2021, has like a dozen gaps. I mean, it really does. It has like 12 or something ridiculous. There's tons of gaps that go up that never got filled until way, way later. We came back down, like years later. So I don't think that every single little gap to the upside is always going to be huge and bad. But I'm thinking like, in my mind, like, why would you want to have a gap up here? Like, you know, like it just doesn't make sense. I don't even really like the gap that we made here, to be honest with you. The only kind of consolation was that it continued to run for 300%, you know, and then you're like, okay, well, at the very least, it's not going to come back right away. Not likely. So I never really want those kinds of moves. I don't really care. To me, that's not like hyper bullish action to see it run up at the end of the day. I don't know where that comes from either. I can't imagine like being abused by those moves over and over again and then like continuing. It's like Stockholm syndrome or something. Like, I don't know. Like, why do people still like to see that kind of stuff? The end of the day pump. I'm like, I just don't understand that. It's not always like super bad, but it's just like, why would you want to see that? I don't get it. It's like you've got the emu who's just beating you to death with these fake out head fakes at the end of the day, and they're almost never good, and yet people still like, I don't know why, but people still rally behind those things like, yeah, nice pump, end of the day. And I'm like, no, it wasn't. We pushed over resistance. Like, why would you want to do that? How many times has that been good for us to leave the day without any support? So I would much rather see this kind of an action, and we didn't see it here. So, I mean, I didn't get what I want. I don't get what I want just because I want it, right? But I would much rather see this kind of a support action as a technical trader, for the most part, like that's the kind of stuff that I want to see. I want to see the supports build. I don't like seeing it just take off, and the gaps are notoriously difficult like that. And then also end of the day pumps, I just can't stand them. When they look like they could be a UT, they usually are. So I was really happy end of Friday. And maybe it didn't communicate that way on the stream because I was kind of bummed out about being low. I don't like having come down, but a lot of that was residual frustration with the fact that we didn't hold 503. I mean, like when it came up, it just looked nasty and it did that pump and then it slid back beneath and it's like, crap. Well, now you're on a razor's edge because you can't go below 5 again. And it did. And so the rest of that was just, well, I'm resigned to it coming lower. Let's see what happens. But in terms of like Friday, I don't know if I left with the wrong impression, but I just was waiting to see what was going to happen. So when we left on Friday, I think it was again like a couple hours before close. We hadn't seen any kind of final resolve from this push up. We didn't know if it held. I just made an argument. I just stated, it was a discussion. It wasn't like arguing with anybody. It was just with myself. And I was just saying, I think it would be better to come down. So I was pretty happy going into the weekend. I was very peaceful this weekend about the price action on AMC. And I still am. I think the potential is there. And if you missed the very beginning of the stream, I think it's probably like the most important part of the stream today because I talked about why I think that's the liquidity shelf at 460s and it's not significantly lower, and why I think 485 is still like the key level here. For us to be kind of chopping on it right now, it just reminds me a lot of what happened here, like this very last little bit, this tiny little, iteration that happened at the end of the day on May 10th was all kind of set up right on top of and slightly below that 296 liquid center. It's very similar, although ours is much larger, which makes sense. It's a bigger range. It's very similar to what we see here. This setting up right across 485, dipping down towards that floor. It's got the right markings for like an auto reaction, phase B top with a spring. It just has to spring. If it doesn't and it iterates again, then I'm just looking at slightly below here. Accumulation almost always ends with a kind of whimper. It's, and if you thought this came out of nowhere, then I would just urge you to go back and just look at this. If you thought, well, May 10th came out of nowhere. Nobody saw that coming. No, definitely did not come out of nowhere. The whole range itself had built up in a very accumulative way. And that's the case when you have institutions buying in. You look at their 13F filings, they're buying in right here, right before it takes off on the 10th. But if some guy from podunk nowhere with a microphone can look at this and say he thinks it's accumulation and has all the right signs and does the buy-in as well, it's not coming out of nowhere, And then also the idea it came out of nowhere and it just looks like garbage. Yeah, it doesn't. It looks like a pitiful kind of end. Like there's not a lot going on here that looks really strong, unless you're paying attention. And then you notice that this is like that, again, we were talking about earlier, and I did this in the beginning of the stream to some degree. I'll do it again now, but I'm not doing a lot. Unless you look at that and you see that as a really straightforward example of a Wyckoff range, auto reaction, phase B, spring. And we've talked about these quadruple flushes, 1, 2, 3, 4, 1, 2, 3, 4. We talk about that a lot on this stream because most of the bottoms that we've had look like this. So is this volatile enough for that? Maybe not. I don't know. Maybe we're missing one down here. And I was saying earlier, it's possible tomorrow and the next day we could be lower, chilling out, and people will be like, this sucks. Hey, AMC, blah, 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 blah. But if it makes the right motions, why would you think that's bad, That's like going backwards and looking at May 10th and saying, yeah, that was terrible. It was a terrible setup. No, it wasn't. It was only terrible if you didn't know what was going on and you were like oblivious to this being like a bottom, you know? Well, everything's easier in retrospect, Booksy. Yes, it is. But I'm telling you right now, and I'm not saying it as a form of like braggadocio or something. I'm telling you, it was very seeable. I saw it when it happened. I did not flinch. I exited put positions when it dropped down here. I kept all of my long positions because it looked good. I had no idea it was going to rip 300% over 2 days, but I knew it was going to be a potentially big move up to that 14 area. And to this day, like, people still ask me, I don't know where that, there's this mystery of like, what did you see this coming? It's like, well, kind of. I mean, I saw the breakout coming. Did I see it going in 2 days? No. You know, people want to know if you could see that move coming like perfectly. No. You know, timing is tricky. And I had imagined, at least to some degree, based on the trajectories and everything, that it was going to take a lot longer. I think I had it coming up and hitting like maybe a month later or something, like kind of chopping up this way to the top and then coming back down. I don't know. I'd have to go look at old charts. I had the move. I had the targets. I didn't have the speed of that move. And I don't know if anybody did, you know, except for maybe the institutions that were driving it with the buy-in. I have no idea, you know, how you could have known it was going to move that fast. But when I look at something like this, it's like in my opinion, all you can do is kind of look at it and say, all right, well, there's definitely a chance that this is actually a really strong bottoming action right now. It's still a possibility. We've got a phase B bottom at 474. If it drops below and chops below, it doesn't mean that it's not a spring. It's very possible that this could chop below here. I have it kind of high. Technically, this bounce has already happened, so I don't know. This might be a little redundant. Yeah, it may have already happened because I already have it like, it's the same motion. I just have it to the left or to the right. So it's possible that already happened. We've been talking all morning and he's already gotten a big bounce here, so I don't know. Maybe it's done. It's very possible that you still need to do another iteration lower. And then, frankly, we don't know because big picture wise, this could have a whole nother one right here. Well, that's not comforting, Booksy. No, I get it. It's not. But it's just it's about our perception of it and also our ability to fully understand everything all at once. And it may be very limited. I might be looking at this thinking this is it. And then tomorrow it could be here. And some folks are going to look at that and say, well, that means you didn't do good TA, right? Yeah, that's an argument. I think right now the RSI looks really close. This is the 30-minute. This is the 30-minute. Sorry, that's like the same exact area. Let's go back. You're like, of course it looks close. It's the same exact thing. I was like, that's really close. I mean, they're similar, but again, it's like I could see how there may be a difference in terms of timing because this is by comparison, this is a very small range to this one. So the range that led up to the May run up that we've looked at recently is very small. It's like a month versus like a 3.5 month range that we have now. So even though these do have some similarities in terms of like what's going on here on these bottoms, it doesn't matter. Like I could be wrong about it in terms of scale and it may still have, I guess what I'm trying to say is, let's say for example, this failed again, it didn't go up, it went back down. I wouldn't look at that as like, oh, I was completely wrong. In the end, it could end up doing this kind of motion here. And you'd end up with like, okay, well, we've still got the deviation. It's just the scaling was off. Another thing to note is that, at least in this time frame, that jump is, I don't want to say steeper, but it's kind of like the line itself, just again, as a comparison model, the line itself is steeper on the 30-minute. So like this jumped very steep. This one doesn't look quite as steep. It's a little wider. So like it wouldn't be, again, out of the realm of possibility that this does this kind of lower push here. I could see it, and it wouldn't phase me. I'd just be like, okay. Are there any other ways you can determine that, Booksy, so you could be more exact? There was one other thing that I did when we looked at this last time. I think it was these head and shoulder like wind up unwinding kind of things. So like these exist as a way of kind of building up, building back down. I call them head and shoulder because they have an appearance of like shoulder one, head, shoulder two. And they did the same thing like 3 times in a row on this walk up, which makes it easy to see visually. We started doing the same thing in our local time frame. And again, it's kind of like, this is a little imperfect, but you get the idea. That walk up, that walk up, that walk up. So that's another way to kind of look at this is like, well, there's this kind of like continual, I don't know what you want to call it. It's almost like a flag, but it's not at the same time, because in this case it's making higher lows. It's kind of strange. It's almost like it's flagging up, dropping, but it's not dropping as far. So it's a little confusing to call it a flag, but you get the idea. Head and shoulder, flag, whatever. So there is a way to kind of measure that for us, and that would be to look at those similar actions. So one of them, we already got it right here. It's probably this guy. I mean, we probably already have it, to be honest with you. Probably this is the line, more than likely. So maybe you could do that. I don't know, and just kind of see if you could figure out. I mean, it looks right to me, but at the same time, it's like, how does that help you? I don't know. Maybe it's a way of measuring. I've said before, and I'll say it as many times as I need to, there are times where like I genuinely wish I was just kind of smarter. I think there's things that I could probably pick up on if I knew a couple more things. I feel like I need to keep learning. There's always things I feel like I could do better. And this one definitely has the same motif throughout, and it keeps that trend too. I mean, you can see it here to here as well. So I'm like, yeah, that was really easy. But this one's a little different. I mean, it's kind of, at least the way I drew it, doesn't really respect those bottoms. So, like, I guess what I'm trying to say is maybe there's a reduction here, like mathematical reduction. Here to here to here to here. I don't know. And somehow it's like really easy and you just have to measure it correctly. I don't know what it is, but it could be there. That might give you a sense of where it should stop. Those look pretty similar. It's like slight reduction. And then it's like super small reduction. It's almost like a parabolic kind of thing. Quadratic, maybe. I don't know what the word is. But I don't know how to do that locally. I would just be like guessing if I tried to attempt to do it, I think. Again, I'm sure it's there. I just don't know what it is. I don't know how you do that. Maybe it's this. It's really hard to say. Could be a lot steeper. I don't know. Regardless, you can tell if that were the case, it would have to be compressing. And you guys are like, I hate that word, compressing. I know. The iterations, I think, are done, but I think the rest of this motion is really important. So it's an outworking of that remaining action. That's the most important part. But it is doing it in a way that still has the potential for a spring. And there's always a compression into a spring. It's complicated. I don't like fractals for that reason, because you end up, sounds like you're talking in circles and it doesn't even make sense. Like in my brain, it makes sense, but I know I can't explain it well enough. So it just sounds like I'm being like a paradox to myself. It's not compressing, but it is compressing. So basically, you don't know anything, Booksy. Yeah, I mean, I get it. I do. I totally am like with you. I'm like, yep, that doesn't make any sense to talk about it that way if you think that's the case, you know. Yeah, but this looks right. I mean, this is definitely one of the markers, so I don't know. But I don't know where you'd put it. Again, it's kind of like, who knows? You would assume that it's not going to be as wide as the previous one. I mean, that's a given if it's compressing. So at the very least, you could have like a parallel here and say, yeah, I don't think it's going to go below here. But beyond that, I don't think you can do it. So that's not really helpful, is it? Maybe, yeah, maybe it has to do with this low as well. I don't know. This comes from the previous bottom, and this comes from this one. Yeah, that could be the case. Maybe it has to do with that. It's like right there. That looks about right. Let's use that one. You know, like, that's a very haphazard way of picking one. Yeah, but I don't know what else to do. I mean, there's obviously there's more than one here you could pick, but I think that's probably okay. If we're just throwing spaghetti at the wall right now for the iteration bit, that's us. I think there's probably a way to figure out that kind of stuff. Like I did it before with the compression upward here, and I got really close. So I could probably do it with the compression down, but it might be just as effective for someone to look at this and just pick out a target and be like, well, I just think it's going to be this support or that support. And then you'd end up wasting a lot of time to get the same answer as somebody who just looked at the simplest version of it. So if it's the floor here, then you're not going to drop significantly below anyways. So would it make sense that that parallel ends up being hit and it drops to 473? Yeah, because that's the that's the phase B floor at 474. So like naturally, if it just dipped to 473 and took off, we would be like, cool, the parallel worked. But did it? I mean, yeah, it did. But we found that already. We didn't need to do that. So it's kind of like a roundabout way of kind of finding the same answer, I guess. But maybe in some cases it's a good thing because in this way you'd have a let's take a look at this micro now. I want to see it here. So what I'm going to do is reframe this one. We're going to compare it now to itself instead of comparing it to the previous, because now I want to see what this little bitty guy looks like. I like to do that sometimes because it gives me an idea of continuity. Like, hey, if I'm saying that this is a bottom or this is a top, is there more than one evidence for that, you know, as a sort of a matter of fact? And if there is, that's a good sign. But I don't think that it matters that much. All right, I'm going to do what I don't like to do, which is go to the 1 minute. Yeesh. Look at that. That's interesting. Look at that chop. Look at that chop volume right around. That was Friday though. That's probably why. 481, huh? That's funny. I had flip-flopped between 485 and 481 in the beginning, like early on. We used 481 in that one range, the very first range. I don't call it a range. It was really a bear flag, but I used 481 back there, and then I switched to using 485 immediately after that for other reasons. But in this case, 481 seems to be a bit more of the anchor right here. This is below that. Excuse me, sorry. So the question is, does this look like potentially the same setup? Maybe. I mean, there's definitely some similarities in the build out. I don't know if I want to call it a one-to-one iteration. So that's the breakdown. This is very steep, but it doesn't have any kind of reactive move yet. So it doesn't really have that same push up here. It does have a lot of the same vibes though. Auto reaction, support, phase B top. People are going to say head and shoulder, but I don't really care about that. I'm just looking at this secondary push doesn't come back above the auto reaction, and that's all that matters. So yeah, it could be a head and shoulder, but who cares? Like, I'm sure there's head and shoulders on a lot of accumulation ranges, because it's going back to a place of supply. But this looks good. So we're definitely rejecting off 491. So I think that was the right number. We already knew that though. There's an acceleration in this motion. Where's the volume at? High volume right here at 474. That's reestablishing that as a floor. There's a heavier amount of volume right there than elsewhere. So there's clearly like a lot of buyers there absorbing the selling down to it, like right as it gets towards that marker. But there's not really enough information here to draw a strong conclusion. In fact, I think we were right. I think this is a phase B bottom. It's got like a triple bottom feature to it, but it's chopping up right now. It looks like it's missing that drop. We are accelerating, so it's possible that this is like a parabolic type move again. We're just waiting for that break. Down, down, down. Notice that the downward motions are getting more severe. So like down, down, down. You see how they're like pointing, they're almost all pointing to the same place. Let's see where they're going. They're just pointing to below 471. So the goal seems to be, so this is one way to do micro iterations, as much as I don't like that. I think it's too small to draw a lot of conclusions, but it's one way to do it. So what I'm going to do is look at the support, where the support was found, and the resistance top. So resistance top here, support found here. So it's definitely accelerating. It's coming back to check it. It looks like 465. Mm-hmm. 465 today on Tuesday. Let's see if that final trajectory looks like it's also going to the same place. And it does. So there's an acceleration here to get down to that 465, which totally makes sense to me. Looks good. Do you see those gaps up ever filled? I don't. Yes, but let me put it this way with gaps. Look at the fundamental value of the chart. Look at the fundamental value of, the company. If it doesn't make sense from a value standpoint to just market value standpoint to fill the gap, I don't think there's any reason to think the gap will fill. So AMC filled all its gaps back to the downside. Why? Well, because they had a lot of problems with debt that never really got resolved. Some of them got resolved over time, some of them have not. They've still got a debt problem, regardless of how much better it's been. And it's been a lot better. I mean, we've seen a lot of improvements. Nobody would sit here and say it's gotten worse. That's not true. It's not gotten worse. It's gotten better. But is it still kind of bad? Sure. So from a market cap value, if the market thinks that the stock is worth less and it's overvalued at the current price, then you're more likely to see those gaps filled down, the ones that are down below. I think that when you look at the big picture, that's why a lot of gaps don't fill. If you look at gaps on like your Teslas and stuff, it's like at some point the fair market value for the stock, for example, like may just be so much higher than those gaps. So you're just not going to go back there. There's no real reason. And it would be silly to say that it has to go back because there's a gap. That doesn't make any sense. So do I think that most analysts look at AMC and think that was worth a lot less than, $70 a share? Absolutely. It's very reasonable to see why it came down. Now at this point, if it were to go up and fill a gap at like $200 or something, wherever that value is now, does that make sense for the fair value? It may not. It may never make sense again. And especially after undergoing the ape thing and the reverse split, and then not knowing what the future holds, a chart can get away from it's weird. It can kind of get away from its own. I know it sounds bizarre, but it's kind of like, I'm just thinking about it mathematically. It can kind of like stair step away from those ranges and just never go back, where it just doesn't make sense to go back. So I think that my argument has been that for a little while anyways, my thought anyways, maybe not an argument, but I've been thinking about how where the fair market value is for AMC. I know it's undervalued right now. I think it is anyways. I would say I know it is, but I think it is. Do I think that it should go up to like $200 a share based on value? No. I don't. Do I think it could, on a technical basis, do something like it did and have some big giant motion? Sure. I don't think it was ever meant to be valued that high either at $72 a share. But it happened anyways. Didn't fundamentally make sense to go up that high. No, but it still happened. I've been looking at it for a while now and thinking that the original opening value of AMC, that should be your like barometer for health, I think, on most stocks. So if it's below that, it's because the market thinks it's gotten worse as a company since it opened, right? Assuming that they got the value right in the beginning, the valuation right, which is usually based on exactly what it sounds like. It's supposed to be based on the market cap, what they think the company's worth. So if the company is worth more than it originally opened at, it should be above that price. If it's worth less than what it originally opened at, then you think that it's worth less, then it should be below that price. So right now, do we really think that it should be worth more than when it originally opened at? That's the question. I think you have to answer that question first before you can make a reasonable assumption about gaps that may have appeared above that value. Because if there's gaps way up there, and it's not really a question of like fundamental worth or whatever over a long, long period of time. We could argue that could change and all that. I'm just saying like more immediately, people complain about the gaps not filling, the ones that are higher up, the gap downs. And I'm like, well, the chart has had ridiculous shifts and weird value changes and stuff. I mean, it's hard to see it like you did then. I'd have to look at the original market cap value and then look at the market cap value now. But from a technical standpoint, to me, it looks like the stock could easily avoid ever coming back above that value. Like it might go back to test it within the next couple of years. It might go back to test that opening value. But from a fundamental standpoint, if I were just investing in this long term, that's the question I would ask. Do I think it's worth more than it was when it first hit the stock market? Because if it's improved its market share and it's improved its profitability, improved on its business model, it's dealt with its debt and all that stuff, it doesn't have debt or whatever, yeah, I mean, of course you would say, yeah, it should be above there. So that's the way I would kind of look at it. And that's why I don't think some charts will ever fill their gaps, because you've moved beyond that value and it doesn't make any sense to go back down there. If Tesla's like, and I'm just using it as an example, it's an easy one for me. If Tesla's worth, I don't know, if it's worth less than it is now, then yeah, you would say that, okay, well, maybe it could go down and fill some gaps. But is it ever going to be worth what it was when it first opened? Or the first few years that Tesla was on the market? Is it ever going to be valued there again? If the answer is no, then gaps from that period are not going to just magically get filled because they're there. Like, it doesn't make any sense. Gaps are about liquidity. If liquidity moves on, it moves on. And that's why sometimes we don't fill gaps for a really long time, and sometimes they never get filled. I think it's important to know that they're there. I think it's important to know kind of where they are. They typically mark really important support and demand levels, because that's where you have a high amount of buying and selling, usually off those levels. That's typically why a gap is formed. And then you've got, and you guys are like, no, it's not. It's all after hours nonsense. Well, yeah, but it's always there. I mean, you can go back and look and see, like, that's an important level. You know what I mean? Like, it always ends up being significant. So it doesn't happen at insignificant levels almost ever. So it's sort of a catch-20. I mean, I don't know, chicken or the egg kind of thing. I don't really care how you want to define it. So I would mark those off because they're probably important levels. And then that's about as far as I would go for now into saying, like, yeah, those levels probably mattered for some reason. A lot of people look at that $45 or $44 gap and they're like, that must be really important. It is important. And when you mark it off and you look back in time, it's a very important historical level. Like, so naturally, like, could we get back there one day? Yeah. But it's also below, you know, the opening, you know what I mean? So it's like, it's still low compared to the whole chart, the whole range of the chart. It's still in the lower half, arguably. So it's like, there's definitely some gaps that I think could get filled to the upside. There's other gaps that we may have made like way back near $72 or whatever when we were up that big top that I don't know. I don't think they necessarily have to ever be filled. There's no essential like rule that says we have to go back there if it's, and we don't know the future, but it wouldn't make sense just to say, oh, it's going to be filled just because. So locally, I think it's more about liquidity and marking off things. Big picture, I think you just have to kind of look at historic support levels. You have to look at what the value of it is now. Does it make sense to go back to that value that it was at when it was at those levels? If the answer is no, then no. You know, and again, like, there's a sense of, and TA is the same way. Like, I'm a, you know,
my hands up. I'm like, I'm guilty of this, like overcomplicating things at times. But it really is that simple. I don't think we need to overthink it. I think there's an overcomplication of gaps. Because I've heard people say stuff like, there's a gap on SPY that's like way down here, and we're going to go hit that. And I'm like, no, that doesn't make any sense. Like, just because it's there doesn't mean we're going to go there. You have to make a better case for it than that. You'd have to make a case from a value perspective, a liquidity perspective. Why would you go down there? Why would liquidity seek to go back there to those values? If you can make that case, then sure. But a lot of people don't even try to make that case. It's just there, so it must go, right? No. My efforts to do that locally, I think, stem from that big picture way of thinking. I try to think about the market that way as like, well, did they mark this off because they may want to come back here? And if so, then yeah, I think there's a probability it fills. But if it's there just because of like a breakaway or whatever, we've left the range, I don't think it's wise to just think you're just going to go there because it's there. You could ask every single bear that's bought $3 puts since this thing came down. And it ain't over till it's over. They could prove to be right, but they certainly have not been right so far. Like, just because it's there does not mean that you're going to go. I think it makes a case for it, and it's a self-fulfilling kind of thing. Where as a result, you have a lot of trajectory, you have a lot of drive towards that liquidity gap, if you will, but I still think it's possible we could go to 3 right now. Not right this second. I think it's more likely we pump up first and then go back down. I still think that. But that's where I'm in disagreement with some folks who think that it's not possible, because that's the fundamental disagreement, right? Is that some folks think that it's a value that we're not going to go back to. We're not going back. We don't have that market value as a possibility anymore. We're going to hold above 6. Like, that's got to be the new fair market value bottom. I don't think we're going to ever come back down. Like, it's the trap shorts or it's this or that. Okay. But I don't find that as really that compelling of an argument. I think it's easy enough to see it going back down. Like, we were just there like a few months ago. It doesn't make sense to me. Like, I haven't seen anything change that significantly that makes me think we couldn't go back before it's all said and done. So it's an open door in my book. I'm like, I don't know. I don't see it as it has to do this kind of thing, but I could see it as it could happen, and it definitely wouldn't be confusing. It would just be, okay, we're going back down, getting that liquidity again. We're going back to the 3s. I disagree, Booksy. Well, again, like that's the thing that I think will separate people who say that a gap will be or won't be hit is ultimately like value, a question of value. The technical side of it is a little tricky because the technical side of it has more to do with liquidity gaps and exploration of liquidity. And there's no hard and fast rules to it, but the generalized kind of concept is that if you didn't trade that in regular trading hours, then you didn't interact with the rest of the market. There's not really price discovery. And if the goal is price discovery and liquidity is based on that to some degree, and liquidity as a term is this idea of like, where are we able to trade the most? So if you think about liquidity, sometimes you think about it as, I hope you guys all know what that means, but like I'll just say it in case you've like not heard that term enough and you're wondering why I even because it's about like where is the trading happening, right? So the idea of liquidity, if for yourself personally, is like how much cash can I move easily. If you're illiquid, it usually means that your cash is tied up in something. So if you have a bunch of shares of AMC, all of that might be considered not liquid because you can't immediately access it. You have to sell something in order to use it, right? And then wait for the transaction. In the market, you can think about liquidity as that same concept, but it's how easy it is to trade shares. So the search for liquidity isn't just a search for like supply and demand levels, although it is. It's this idea of like ease of access. And so if you're wondering like, well, why are we been sitting still for 3 months? There's a lot of liquidity here. A lot of people are willing to trade shares between 465 and 550. So because there's a lot of people that are trading shares here, there's a lot of buying and selling going on. It's a very liquid range. There's a lot of exploration that can be done. It takes a lot longer to exhaust the liquidity before you move on. And every single range is like that. If people are comfortable trading in that area, there's no precedence to leave. I mean, Tesla traded for years sideways. If there's like, so there is a question of value, but it's also liquid. Like if there's tons of liquidity there, your operators are going to just trade it until there isn't, So I don't want to blame anybody. Like I'm not going to point the finger and blame retail for why we're trading sideways, but clearly like there's a lot of trading going on in this area and it's been going on for a long time. And people talk about low volume. That's true. Like there's been some pretty low volume, but there's also like tens of millions of shares being traded every day. I mean, it's not like, for the most part, on average, it's been pretty decent volume. That's not insignificant. And it's been fairly consistent, as the search for liquidity continues. So what happens in a Wyckofian range is the concept of traversing for liquidity. Where are you finding the most traded shares? And that's the idea. The idea of a spring is not just to accomplish XYZ. We talk about those kinds of things a lot on here. You are accomplishing a lot of things. You are, maybe doing a bear trap. You are maybe, getting out weak hands. You are maybe doing this or that. But it's also like a genuine test of liquidity. You're seeing if there's a desire to trade. Is there no liquidity down there? Those are things that we as human beings would have difficulty measuring in real time. Like you wouldn't be able to do that very easily except to look at volume as an indicator of like, okay, they had a heavy sell down to get to the spring. Now what? I've talked about it before, but generally it's better after the spring has advanced. You may get one or two heavy sell downs towards that floor, but then usually you get very low volume follow through on a spring. And the reaction might be kind of violent, but you don't really want to see there to be like a heavy amount of liquidity either, because that would indicate that there's a desire maybe to trade lower. Like there's plenty of shares to trade down there, Right now, are people more willing to trade at $3? Or are they more willing to trade at 15? And then you can add in like the extra bits about, okay, well then why would you mark it up ever if people don't want to trade higher? That's a good question. I guess you wouldn't. If people don't like trading at AMC at $30 a share, they're not going to trade it at $30 a share. They're going to go to a place till they find liquidity. Once they find liquidity, then you can spend more time. But if they found a lot of liquidity between $11 and $3, that could end up building out to be a huge macro range. And that's what I've been saying is like, I don't see it as just a small little area. I think you could see this as a humongous area. And frankly, if there's a desire to trade across it, you could easily see this become a massive trading range over time. And until you've kind of exhausted that trading range, which would be very methodical and time consuming, there's no really any need to kind of move on. Unless Again, ulterior motives. This is where you talk about emu stuff. Emus, talking about like alpha operators, the ones that are pumping everything. It's like shenanigans, basically. I mean, you know what shenanigans means? It means just like things that you're doing, not to waste time, but like you're doing things in your own way because you're trying to accomplish your own means, regardless of like, in this case, like regardless of what it means for the market on the whole. So shenanigans in our market would be like, hey, this operator bought in like down here low and they want to drive the price and build a huge range. Well, to them, that might be, hey, we're going to accumulate here, here, and here, and then we're going to pump it up really high and then sell, you know, really high and then drop it back down. I mean, it doesn't have to be this perfectly linear exchange of shares, like that's super neat and organized. They're going to do what they can to maximize profits. And that's the whole nature of, frankly, like the liquidity studies in Wyckoff was to derive like what is the motive of operation? Like what are we trying to do? What's the motive here when operators go really high and really low in the range? Like what are they trying to accomplish? Why does it do that? And if you know generally why that happens, then it doesn't catch you off guard when you see like a head fake. You're not like, what the heck? This dumb stock, it doesn't know what to do. These operators are terrible, blah, blah. I mean, I concede very readily that I didn't like how high this went. I was wrong about it, how high it went. But I'll tell you one thing that seemed really obvious to me, and this was just studying volume. I said back here, it didn't look like the way this was operating down. I was like, there's no way they could get below 491 easily without an upthrust. That to me was a big deal because I don't always see those kinds of things. So I'm like thinking back on those. I think about like, is that a skill that I'm getting better at? I think so. I think I'm improving on that skill and understanding like, why would you go back up again? Well, you would do it so that you could drive the price lower. If you're trying to go down and you're not getting to where you need to get to, and it didn't seem like 491 was the place that you would necessarily want to stop. Because remember when this was iterating down, I had it built and I said that it didn't seem like that was the goal. Like if you were trying to get back down to this gap over here, right? Here's a question of liquidity. Where are we going? Well, maybe to this gap over here. We're going to build out along this gap. The problem was that the way this was moving, there wasn't enough sellers. The selling was like dropping really rapidly coming down, and every iteration that I measured out looked like it wouldn't go far enough. Remember we were doing the little measurement and it was like it stopped at 490. There was nowhere else to go. And I think all I'm observing is a pattern of liquidity, like sellers are drying up. So you drive the price high in order to find more sellers, right? And then you generate like a head fake or a breakdown. It sort of, again, like gives you that sense of like, uh-oh, it's going the other way. You get a lot of stop losses triggered. You get a lot of buy-in here, and then it helps drive the sell-off when you pass back through it. So the buy-in at 504 and then the sell-off at 504. And that's how you can generate some liquidity moving down. So when we look at these kind of things, yeah, there's plenty of theories and like ways of looking at it. Like Elliott wave is essentially a study of momentum as it relates to liquidity, like how it interacts with the ups and versus the downs as you're moving, especially with the Fibonacci's. Wyckoff is a range-bound analysis of liquidity. And then the market on the whole should be thought of as like whether or not it's liquid or illiquid on the big picture. I think that there's been a lot of, I'm going back to like where we were this morning, but there's just been a lot of false information about what I think is very false information about what a rate cut really would do and how it should interact with the market, or how the market should interact based on the rate cut. And I think there's just a general misconception that it's somehow going to be this horrible thing. I don't necessarily think the rug pull idea is completely wrong. I mean, you could have a corrective move for sure, but I'll just repeat it again. I'm not going to go back through it again. It was early in the stream, but it's like 85% of the time after a rate cut, the following year is bullish. So like, it's not accurate to say that it somehow turns the market bearish. That's just not true. And the examples that people use are the 9/11, 2001 crashes, and then the 2008 crash. I mean, those are like the two outliers, and those are the only two times where it's not been like a bullish response to a rate cut. So historically, like, there's just very little basis for saying that somehow this is like a repeated thing. It always does this. I don't know why people say that, but I've not found that. I don't know where that's come from. But that's just not true. And if you're only using two examples and it's just the two bearish examples, well, of course, 2 out of 2 times it's dropped. All right. But 14 out of 16 times, not counting those two, it's actually been good for the market, which makes sense because it should increase liquidity in theory. And that also explains why adding, hiking those rates from like where they were to where they are now caused a massive 1-year pullback. But I don't get it, man. Like, GDP growth is still there, market's still growing. We've gone from like 9% inflation to 2.9%. Like, Powell did a good job. I don't know. Like, he and his team, it's not him, but the team, they did a good job curbing inflation. The job stuff is definitely something of concern, but you guys are like, that's exactly right, Booksy. That's the big problem. Yeah. It looks like a lot of the markets kind of shifted a little more red. It looks like GME's back down. 23.28, nothing really super crazy here. I don't like the idea of it closing below 23.10, for example, but right now there's just not much to say. We'll have to wait the day out and see what happens. It looks like it came down to 23.04. It tested that level. So I'm not sure. Made a higher low here on that bottom, on that 2-hour candle, but it could be a minor sign of weakness that it dipped below there, but it's just so minor. I don't know what to say about it right now. Yeah, it looks like it could be a topping motion. So what I would prefer is not necessarily what's going to happen. And what I would prefer is that we chop high here and then we have a later sell-off. We cool off the RSI by going sideways. We have a later sell-off that goes back down to test that creek. If we'd got an early sell-off, it may actually be better for us because if we came down early and tech this and then we rebound, again, it's kind of like a similar situation. You may end up just in a much larger schematic. And then later you can make an argument that we may not need to come as low. Because if you establish like an auto reaction and a phase B top and then the phase B bottom is not significantly lower, maybe that's where you could get that 23.10. So there's a huge amount of possibility here if we start going sideways. So we'll just have to wait and see what happens at that 23.10 mark. Let me see what the 50-50 is here. That's pretty low. So it's a 50% rise above 23.10 from that bottom at 21.70, which is close to that 21.96 mark. So I'm just looking at it like how big could the range get? There's a little preliminary support here, or excuse me, preliminary supply here that stopped us around 23.36, and it found support again at 22.86. So there's a small range possibility that sort of stops at 22.87 or so, but like a larger range is possible as well, and that could be including, I mean, kind of back down to here at 22.27. So yeah, I think our estimation might be right about that. Like it could come down that low and then build out a much bigger range here going into earnings. We'll see. That's just me looking at that, like where that top and bottom might be. Really, there's no cause for alarm just yet. There's nothing really to worry about. This might not even be done for all we know. This could be sort of like a backup that then advances again, like we were thinking the first time. Like, I don't know, you know. We'll have to watch volume. If the volume drops significantly on the next pump, that could be bad. If it goes higher, because that could be like a more of a distributive top. If volume stays pretty high or higher on the next pump and it goes higher, that may be a little more bullish. You could call that your buying climax. We'll see. We're just not there yet. And then naturally, you guys are like, well, why don't you just draw like a range? Or like a trend. Yeah, I mean, you could do that. It's already lost the trend, so it's pretty much the ship sailed, you know. That's that. And this was a really easy to read kind of dive. There was a divergence here on the 30-minute, on this whole way down almost, especially this last little leg. I didn't trade it like actively. I have leaps for GME, but I didn't trade this like particular bottom right here. But you could have. Looked pretty strong. So yeah, we got a little nosedive. Again, it looks like 465 seems to be like the likely target. There's a narrowing kind of push here on the downward motions. That made me think that that's probably going to happen. On this chart, it doesn't look like it would hit that creek or that downward trend support, but I think on this one it does. So, I mean, it's a 1 minute. Take it with a grain of salt. Yeah, it looks like it hits that primary move down here. Still divergent on the 6 minute, definitely divergent here on the 30, not even close yet. So you talking about what we just saw on GME here, this sell down, this motion, this is a 30-minute chart. I mean, it maintained its strength in that divergence. So guys, I can't stress it enough. Like sometimes what looks like a weakness at the naked eye, like, oh, you're down 2%, oh, you're down 5%, oh, you're down this, oh, you're down that. Like, yeah, I know it's there, but you gotta like pay attention because there's stuff going on. No, I don't agree. I don't think that down is... I don't know what you guys are talking about, actually. I'm looking back. Some of you are talking. I don't know if you're talking to me. More often than not, they get filled. Nope. That's... I don't know. You must be talking about gaps, but gaps that are way above us may not get filled. I'm not going to argue about that. So... You're right that more often than not gaps get filled, but that's just because most gaps are really small on the short term. That's like saying including like all gaps all over all time. It's like, sure, 99% of them may look like they get filled, or 80% of them look like they get filled. Yeah, that's more often than not. But so is 51%. 51% would be more often than not too. But this idea of like why they fill is really what I was talking about earlier. And it doesn't make any sense if you look at the valuation of a chart that's moved way beyond its original valuation, that early gaps will just magically get filled just because that's just a really, I don't think that's what you're saying, but that to me would be a really dumb way of looking at gaps and could lead you to trade in a way that doesn't make any sense. Especially with stuff like ETFs and stuff. A lot of people love to trade the ETFs. On a macro scale, the gaps that are still there on like SPY and IWM and stuff, a lot of those are never going to fill. So it just doesn't make sense to say like just because there's a generalized rule of thumb that they're going to. So I don't know what your nope response was, but I probably disagree with whatever you said nope to. Because I think I was being pretty straightforward with it. We're going down, Vado, says Kotoro. Yeah, but you know, you've got a lot of like preconceived notions about where it's going to go based on a trend that you've been looking at, which is fine. I don't think that the trend is the most important thing though, and I'm going to take heat for that because if it hits your trend and it takes off, it's going to be like in your mind like this solidified concrete thing. And I understand that. And I respect that. I know that you have TA that you've been using. But I don't think that the trend is the most important thing. I think it's not about the trend so much as it is about the range liquidity. So if it just so happens to be in the same place at the same time, I don't think that that's going to be dismissed by me. I'm not going to be like, oh, see, it didn't matter. That's not what I'm saying. I think it would still be really important that it hit that trend that you had, but I don't think that in the end, there's very few times where I'll look at something and think like this had to hit some kind of super long-term trend. There's a couple times where like I'll see that and I'll be like, yeah, it clearly did do that. And maybe that was part of the operation, but there's always another angle too. It's always about what's going on locally in terms of like where we are and what's being accomplished. So again, like I know that you're bent on it going down there and hitting a particular trend. I'm bent on it going down and hitting a particular liquidity level. And if it doesn't hit the trend, I personally am not going to wait for that. So I'm not going to be on board with that because I don't think that's what's most important here. And like, we can disagree about that. And I could be wrong. Maybe it is about that one trend, but yeah, I don't want to go through like, I'm not going to go through and like pick apart other people's work or something. So, but you were saying like knife. I don't think that this morning, I don't think I disagreed. I mean, we talked about this being like a potential support with another drop and that there could be a move here that comes lower and stays lower this week. We thought it was like the first thing we talked about. So, and then someone else said AMC's fading on low volume and flat lining tells me the pump is near. Well, yeah, when you get to the final stages of a accumulation, the volume will be low by compared to everything else. I mean, locally it looks like heavy selling, but we talked about it this morning. Most of it's in this bottom. This first sell-off, big deal. That's the one that dropped it. That is a big deal. But then like all the volume is in these bottoms. Like they're really in the lows here, right around 475. They're not in the tops. So that's important to note. But yeah, on the big picture, you know, if we were to look back at this, compared to everything else that we've seen, is this volume significant? No. I mean, it's been steadily declining. You can tell because if you zoom out, and obviously you're including, at some point you're including that massive move, but as you zoom out, you can tell that the volume is shrinking, 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 going back to that big move. So every time I zoom in a little bit, you can see it's increasing, but that's because you're changing like the range, right? So going back to the biggest move, it's super flat. So it started high here on the 14th. If I don't include the 14th and 15th, everything looks like it gets a big boost. And then it looks like the next biggest volume's up here on the 6th. If I don't include the 6th, everything gets a big boost. And then the next biggest volume, kind of in this topping area, but mostly around this ridiculous double flush. So if I got rid of the double flush back here on the 24th of July, everything gets a big boost. So you know, like, it's been diminishing the whole time. It's been shrinking the whole time. So again, it's like the volume may locally look like a lot. It's a decent amount of volume. It's not like a horrible amount of volume. We had lower volume back here, when we were up at, we first tried to push down. That's where the volume got stuck. That's where I was saying there's no liquidity. That was on the 19th. They found liquidity again. There's a heavier amount of volume in this area right below 492 than when we were right above it. So they got there. And then you zoom in, local, you can see it's obviously still increasing in the higher volumes here and here. So it's at the top, it was at this kind of like 1, 2, 3 motion. Yeah. So up here around the reaction from 494 up to 522, and then the reaction below 494 down to 470. That's where the heavier volume has been, right around that middle. So but on the whole, yeah, I think you would say that it's generally kind of just dropped. Has it increased a little bit, since coming below? Yeah. But is this like heavy selling compared to some of the previous zones that we've been in? No. No, it's not. So again, on the whole, it's definitely lightened up quite a bit. But I don't think anyone would argue with that. That's just kind of observation. I'm just saying, oh, there it is. That's all I'm saying. So yeah, and looking backwards too, kind of noticing here this setup right around where this low liquidity was at 5 to 492. It's pretty similar to what happened here, which is also like 5 to 490s. That was right before that big double flush. And then they did sell down all away from 520. That's where the hook was, and then drove the price really low. It's essentially like the same principled motion here. Like you're trying to push down, you can't quite go low here. There seems to be some kind of a support above 5, so then they do a big up thrust and drop it below to get to like the 460s. You see the same motion in this kind of push here, and then they push it up, come back below to get back down to those 460s, 470s. So it's interesting. It's weird now looking at this, is like that RSI doesn't even look like even remotely the same as this, but the volume is so much higher. that weird gap we have there was during the middle of the day when it was like halted. Super strange. So the RSI didn't get like overcooked or whatever. It's really bizarre. Really bizarre to me. Yeah, we'll see. It's kind of hard to say. You may say that 456 looks like a better stopping point. I would maybe say that's possible. Like if 465 is your floor, 456 is kind of like the low of that floor. If you were to look at this as like a little pocket. Let's see if that divergence holds though. I'd be curious. This is an hour. I bet it holds. I bet it gets really close, but I bet you it holds. So here's what I'm thinking, okay? So we've kind of waited the day out. We were wondering if it was going to spring here or not. I don't know, you know, it's not impossible. I'm not going to say it's out of the question that this could pop back up above 476. But if it doesn't get support at this point above 476, I wouldn't be too upset because oh, there's somebody howling outside. One of my cats is about to fight. That was weird. That was really strange behavior by the cat. He like purposely avoided eye contact. He didn't want to start a fight. Right. So unless it came back above this area at 474 with support, I probably wouldn't be like too optimistic about it being like a little spring. Although it does look like it's definitely compressed very, very nicely. 1, 2, 3, 4 right there. Really tight. Really slick looking compression. Look at the RSI. I mean, it's cool like seeing it. I don't really like talk about it too much, but like, because it's like, wow, that's not cool. That beak though is really neat. You can see that compression on RSI really easily. Look at that, man. It's cool. It's like bouncing motion down. So a lot of times that last trajectory might be the bounce trajectory. That's 72 degrees on my chart. I don't know if it's going to get there. If it doesn't get to the target, it could bounce out and come back down to the target. So this is a beak as you see it. That's just fine. We already knew that was going to happen because it was accelerating. A beak? Yep. It's just my fun term for a parabolic. So what that typically entails then when you break out. So we already know where the target is. It's at 465. What that typically means is when you break out, there's a series of, and this is where things are kind of dicey because beaks can be really powerful, but they also can be really boring. And the reason is that the creeks that are built are wide. So like the first one is really wide. It goes way over here. If you went straight up, you'd have to go all the way up to like 487. Then the next one, again, if you went straight up at the steepest angle, would be at like 475. And then the steepest one, we haven't even jumped that yet. So you would have to see them like kind of leap up in succession. The reason why I was saying like sometimes it can be really boring is because the like the overall push is not bound to go all the way back up to the top. There's a price target you can use, and it's really similar to the price target of a wedge, where you take the widest part of the beak and you point to where you think it might go. Like if that's the bottom, for example, then it should bounce out to like 480. So that's about as far as I could say it would probably go if it started breaking creeks. So that could, if it did it now, that could put you back above that ceiling, and then potentially you're good. If it doesn't do it now and it goes down and iterates again and hits like 465, it may not be enough. It may just be like almost like a resistance back up to like 477. I guess it just depends on where that is. I'm going to assume, fidget spinner, that you've not been here today. I did talk about that under 3. Do I think it's a possibility that you go back under 3 again? Yes. But I'm of the opinion that it doesn't happen right this second, that it happens after a massive push up again. It's okay. I said I'm going to assume that because I talked about it a little bit earlier. There's nothing wrong with coming in later. I'm happy to have people regardless. I think that I just have to say it because I can't go through the whole thing all over again. Like, it's a lot. Why not? You got time. Well, sort of, but it's like lunch. So I'm going to probably be pausing here in a minute. But fidget spinner, just to give you a very quick, I think that, like a quick answer, I think that the range from about $11 or $12, it goes up to like 13 or 14, I guess, on extensions, but like the range is about 11 to 12 and it goes down to about 2 to 3. So I think genuinely that this is a big range, and I don't know that I've really ever been able to find a good reason to just leave the range now. And this is the argument that most people have made when they say we're going to 20s or up to 30s or 40s, is that you're jumping the creek and leaving. I think we've only made one of the pushes on the first M, and then I think we're going to make the second push very, very soon, and I think that is going to go as high as it goes. I don't know if it's going to stop short at like $9 or if it's going to go all the way up to 14. Those are my targets. I don't really have high hopes for much else. If it happens, it happens. I will deal with it. But I've got pretty conservative targets. I think there's a decent argument to be made even about the low target at this point. But I'll say this, that those primarily are there as distributive actions. That's my theory. This is where I'm going to differ from a lot of people. I'm going to sound contrarian. I'm going to sound bearish to some folks. I'm not bearish. But I think what we're seeing is an auto reaction right now. That was the big move. We had a giant auto reaction. I cannot find evidence. It's like this, right? This kind of massive push, and then you regain support. I can't find evidence that we're just going to continue and leave just yet. So it reminds me a lot of after that March drop in 2020. It reminds me a lot of that early auto reaction all the way back up to the top of the range to test supports, or to test supplies rather. So I'm obviously in a position of sounding more bearish than some folks. But I genuinely believe that what we've experienced so far has been kind of like this. I mean, look at the micro right here. You see this like dip down, it goes as low as it can go, and the explosive move back to the top. You leave a gap open. This is like what just happened, like in this little small time frame. This is how a lot of bottoms form on AMC. Is you get the auto reaction and like a phase B top, and it might even come a little higher. It might come a little bit higher. It's usually what happens. And then you come back down over time. So it usually pushes up to try to meet some kind of creek requirement. It pushes up to meet some kind of top supply requirement. You see the same thing here, auto reaction, phase B. The exception is on the big picture. What a lot of people look at is they look at that. It's funny too, it's ironic maybe, because they look at the big picture. I'm not talking about they like everybody. I'm just saying a few people here and there who talk about January and June. And they look at that as the example for what AMC is going to do. And I'm like, yeah, but then it proceeded to come all the way back down. And at this point, we know better, because you could easily interpret that as January is the big auto reaction. And then June is like, it could be a phase B top. But it still creates the same motif where it comes all the way back down to the floor. And now it's iterating again. I mean, and that's the crazy thing about it, is like the evidence is all there. We've seen it a dozen plus times at this point, that motif is generally the way this stock trades. It's the one I doodle on my chart all the time. So again, for as simple as I can get, it's this pattern that's everywhere on AMC. And I don't know, like, whether or not this is something that has to be done a certain way or whatever, but the reason this pattern appears everywhere is because it's just as simple as Wyckoff. Like, you've got a spring bottom, phase B support, a spring bottom, you know what I mean? And it builds its way back out. So there's an auto reaction, phase B top, spring, and then it goes, or it distributes later. We looked at these examples last week too. I did a tertiary kind of glance at a few different ones. This is what the big picture is starting to look like right now. And I've said it a few times, so I'll just keep it again as simple as I can. For the greater purpose here, like, I don't see why this wouldn't be what we're experiencing right now, because we're just talking about it here locally, like we would expect this to potentially iterate again. I looked at May and I showed you that it was like that. Oh, there's an iteration here, and then it does it again lower. Go look at 2020. You see the same thing. There's an iteration, then it happens again lower, and then it happens again lower. It keeps doing the same thing until it doesn't. So it's odd to me, like, why wouldn't we expect this to do the same thing? You know? Like, I guess that's what I'm trying to say. Like, I don't know why I wouldn't expect it to do the same thing on the big picture. Like, we had that push up. That's your January move. We had the breakdown. It came below the support where, we thought it would right here, if it did break. Unfortunately, it did break. This was the situation where we were thinking it could go up, and it fails. But I guess what I'm trying to say is, like, on the big picture, why wouldn't you now expect it to do basically the same thing, but happen here? You know what I mean? I don't know. Like, I just don't know why anyone would expect it to be, like, is this not the way that the stock moves? I mean, it is. So, like, this should be a smaller version of the bigger picture. That's just the way iterations work. I can't even express how many times we've seen this. It's like dozens of times. I'm not even exaggerating. Like, that really is that many times. Like, it's absurd. And it doesn't matter what happens in the end. It makes zero difference what happens up here, if it goes higher or it stays low, if it breaks out or it doesn't. Like, this has been the pattern on AMC in terms of, like, waveforms. Whenever it gets to a new bottom, it does, like, pretty much the exact same thing every time. And whether or not it breaks out has to do with this area later on up here, like in the middle. Usually it's like right here, right? You see if it comes back or not. So I made that a little too high, but this is that wave jump. I just don't know why you would expect it to do anything different. I've got to just be what I am, in terms of like the way that I understand the market. It may not be everybody's cup of tea. I get it. It may not appeal to a lot of sensibilities. Like people are like, well, I don't like that. I think it's simpler. It's just like a zigzag, or I know, I get it. I just don't know why the operator wouldn't do this. I guess that's my question. And if it's a question of value, then I don't see what the problem is. So do I expect it to come back and potentially go below 3 again? Yeah, potentially. I don't think it has to, and that's another thing we could get at with this, because eventually there's a change of character. So like eventually it doesn't make another low, because eventually it will jump the creek, like, because if we were to keep doing this forever, it would just keep going down infinitely into nothing, right? It'd be like a black hole. Like it would just shrink and shrink and shrink and shrink and shrink and shrink and shrink, right? Until it couldn't shrink anymore. But that's not usually what happens. What happens is you get to a place where there's a change, like it'll do it again, but then it won't go low, for example. That would be like a change of character. And now you have an outworking of the iterations back to the upside. Now you've got, oh, okay, we have a new kind of move, which is basically like you're now jumping the creek and you start working outward, so on and so forth. So now this jump becomes this M cross, and then you have a potential for, a bigger jump. You guys are like, this is where it's going to happen, man. Well, and this is where debates are, right, found, because this to me is like not really that negotiable. Like I know in my brain, even if I'm wrong about the specifics of it, this will be present. Like it's not a question of my mind, which sounds kind of arrogant, but it's not arrogance. It's more just like that's the nature of the market. I don't know why it would do anything differently. I may be wrong about how high certain things go, where the change of character is, but I guarantee you, without a shadow of doubt in my brain, if we end up back around that $40 to $60 area, and we look back at this, you're going to see those waveform crosses, because they're going to be there. And it's going to look similar to what we've got illustrated, where there's going to be some change of character. I think the greater question is, does that happen down here, like below 3, below 2 something? Maybe, And I'm not using the big picture, but this is basically the big picture. Does it happen at 3 or slightly below? Or does the change of character happen sooner? Does this never reach that low? Because it could. It could have instead of having a spring, it could have an LPS right here. You might get just enough to fill the gap and then not actually go below the floor again, and then just jump and leave. Like, I don't know. It's not really important to me at this point, because either way, my expectation would be that I don't think this is going to just continue to run. I think it's marked off the bottom. I think on the macro chart, the bottom is here. I'm showing you a little doodle here on my chart, but this is essentially the exact same thing. The bottom is where the bottom was in 2020. It's also where we chopped in. We created a little hook when we dropped in around 1388. I don't see why a secondary move here would necessarily do anything except go back and test that creek, which we haven't checked. Not the steeper one anyways. So I look at stuff like that, and I'm like looking at this little micro example, and I'm like, it's not incongruent for me. It's like the same thing. Like you have the same kind of motion on the big picture right here. So why would you think that on the big picture it can't come back down? It's a massive structure, yeah, but I mean, it's already done it once on the biggest picture. Why not do it again? So I totally think it's possible. I even think it's probable. I'd be willing to I hate to do that. I'm waiting to see what happens. Obviously, if it got up above the creek, I'm going to wait and see what happens. And if it made a second advancement, I'm going to wait and see what happens. I'm not going to sit here and pretend like I'm super bearish forever and ever either. Just because it goes up to 14 doesn't mean I'm now a perma bear and I think it's going to drop forever. But I totally think it could come all the way back down and test that floor again. I don't know why you'd put that out of your mind. Like, that's not a possibility. It doesn't make sense to me. It had to be a question of, like, again, like liquidity. You'd have to be saying, like, there's no longer that valuation. And I don't know if AMC's done enough to say that it doesn't warrant coming back down to 3 again. Well, I mean, Einstein, you may very well prove to be right one day. I have no doubt that that could be the case. But for all intents and purposes, like, I'm not really going to be able to solve the world's banking crisis or anything like that, or government problems. Honest to goodness, I think it's important that people talk about those things and they look at stuff and they try to call it what they want to call it. You got to be true to yourself. If you think that it's a big fake and it's going to just drop, please just, I'd encourage you to be true to yourself about that. I mean, just speak whatever you need to speak about it. I'm not interested in necessarily arguing that. That's freedom of speech. That's freedom of thought. But that doesn't mean I have to agree either. So, like, just because you think something is true doesn't mean I have to think it's true. And I think we're both saying the same thing, because you're saying the same thing about me. You're saying, well, you think that's true, but I don't think it's true. Okay. Well, that's where we're at. That's called having different opinions. Like, you can, if you want, try to convince me that you're right. But I think it'd be really hard to convince somebody that everything, is fraudulent and that you have. That's what I've been trying to say about this whole morning, is like, when I started this morning, my argument was, I think there's an overcomplication. And I don't think it's that complicated. I think it's pretty straightforward. There's always going to be people who are kind of on the fringe, who think certain things are going to happen. And sometimes, eventually, they're right. And then everybody looks at them like they're a prophet. And it's great for a time, But that's not where I'm at right now. So it's not going to be my opinion that it's all fraudulent, it's all going to crumble apart. Because the market's big enough to have those kinds of messed up pieces and still continue. And you're like, nope, it's going to crash. Yeah, probably one day. There's going to be a point at which something snaps, and that's happened before. It'll probably happen again. I don't put my faith in the institutions that be. I'm purely just looking at the big picture and saying, look, I've heard it for 3 years now that this is a horrible, horrible market and that it's going to crash. And by observation, I feel like we've already seen a massive correction. I feel that inflation has been curbed largely. I feel that there's not really a lot of data that supports this idea that it's going to... Hey, no. No. Get down. Oh, I'm going to end up... Something's going to break. Hang on. That's all I got to say. You see what they have to show you. Well, okay. why? I guess what I'm trying to say is like, why would I know there's like problems with the economy. There's plenty of problems with the economy. There's plenty of problems with all kinds of things. We could sit here for days, like days and days and days and days and days. I mean, days and days and days. We could be here for weeks, months, years. And there are literally people who devote their whole life to this. They're economists, right? And they devote their whole life to studying the economy. And they could probably spend tens of thousands of hours, become masters on the subject, and point to a billion different problems in the economy all at once. And yet, economies built around, very similar financial institutions have always existed. And I don't think that there's ever going to be a time where like suddenly that just drastically doesn't changes. I mean, you're talking about like the dollar bill losing value. Okay, it's always lost value. You talk about because it just has. I mean, it's all kinds of stuff. No one's sitting here thinking that the market is propped up on gold. That doesn't exist anymore, right? It's propped up on the promises the government has made. That's what the dollar bill, that's how it represents value. And it's been an ongoing debate for generations about how we should treat the dollar, how we should do this, how we should do that. But for me to sit here and say that I'm going to witness it and I'm going to see that happen, that's another thing. That's a completely different conversation. I would have to be claiming that like yeah, but see, I don't agree. Who cares? That's what I'm trying to say. Like, who cares? Even if it's dishonest, it doesn't matter. Like, that's the problem with maybe the world is that the world doesn't generate. It doesn't generate on principle. It was supposed to at one point, and obviously we've had those times where there's been glimpses of that. But the world doesn't operate on principle and honesty. Honesty and the truth have very little to do with anything in this world. They just don't. You guys are like, that's super depressing. I'm not saying individuals can't be honest. I'm not saying individuals can't tell the truth. I'm not saying that even some institutions can't be honest and tell the truth. But I'm saying this idea that somehow the markets have to have like some perfect principled system, that's just ridiculous. It's not true. You're overcomplicating it, man. That's what I'm trying to say. I get what you're saying. You're saying like it's been propped up on lies and it's going to be a rug pull. I get it. But rug pulls happen different ways. They're not always like massive market crashes. Sometimes they're corrections. We just had a correction for like 2 years. We also had COVID, which also was a massive market dump. There's been plenty of times where demand has been tested and it's been prevailing. And if your economy continues to chug forward and maintain, then it doesn't really matter. That's what I'm trying to say. Like, I genuinely don't think it makes a difference. There'd have to be some kind of cataclysmic outlier event at this point, in my opinion. And I think beyond that, I don't think you're going to get what you think you're going to get. Why are you here then? You've been here for a long time. You know I'm a TA guy. If the market mechanics don't work correctly, TA doesn't matter. If the let's just put it this way, okay? let's say somebody told you that your house was built on a strong foundation, okay? I'm not saying it's not broken, but I want you to hear me out. If you're saying that, let's just say, for example, somebody said, hey, your house is built on the strongest possible foundation. It's built out of titanium. All right. And then you find out later that it's not actually built out of titanium, it's built out of steel. Okay, well, titanium is way stronger than steel, but steel is also strong. Now, did somebody lie to your face? Yeah, they did. Somebody lied to you. They told you it was stronger than it really was. But it's still built out of something it's fundamentally working to hold your house up. How do you know that? Because I'm still living day-to-day life. I'm still moving around. My house is not falling apart. Now, here's a good question. Let's say somebody said, hey, that's fine. That's a good example, Booksy, but I don't think they lied about that. I think they lied and they said it's not built on titanium. It's built on wood. Okay, that's another problem. All right, but let me ask a question. Is it still operating? Now it's a significantly weaker product. It's susceptible to fire. That's a big deal. Fire could destroy my house. Wood rot, water could destroy my house. Termites could destroy my house. But is it still up? Okay, if it is, and I'm still walking around day to day, it's a distant elephant. It may one day crack and break, but it's up right now. Wood still operates as a support, even though it was a lie. We know it was a lie. We can keep going. We can make it worse and worse and worse, right? We could say your house was built like a house of cards, like straws or something. Yeah, the weaker the foundation, if it's a lie, the weaker that lie is. So you're saying it's not titanium, it's something weak. Then the weaker and weaker and weaker the truth is, then the more susceptible you are to that fallout. But people are still going out and they're still spending money. People are still going out and they're still buying and trading goods. Like, the problem with saying that it's built on a lie and therefore everything is going to break and crumble, it has to be because the lie is inoperable. Like, it has to be because it's actually fundamentally broken in the way that it's going to fall apart if you expose that truth. Exposing the fact that my house is made out of wood instead of titanium does not immediately make the house fall apart. It just doesn't. There is a lie, there is dishonesty in that. Yeah, structurally it's weaker and it's more susceptible than we'd like to think. That's true. So it's good to expose it, but the act of exposing something does not immediately mean that it's going to somehow fall apart. So my question to you is the fact that, all right, your markets are not truthful, so what? Are they still upright? Are they still operating on the basic principles of supply and demand? You may say, no, they're not, but they're still operating. Exposing that does not immediately cause the markets to capitulate. We already know that's the truth because of what happened to GameStop. I would say that most people at this point understand and believe that there are shorts that are illegal. Like, most people understand that, and yet the market continues to operate. It did not crash because naked shorts was somehow revealed. All of a sudden the markets crash. Oh no, we're revealed. No, why? Because even though that exists, they're already playing a part in that market. There has to be something else that causes that house of cards to fall. And that's why I don't think the idea of like, oh, it's just going to crash because of rate cuts, I don't agree with that. It doesn't make any sense to me. You'd have to be saying there's some kind of a domino effect that rate cuts is going to somehow reveal, but that doesn't make any sense. Rates were already really low, and we were churning out of, an economy that was reeling because of a pandemic. I don't know, man. I think it gets a little too, like, I understand what you're saying. I think maybe I should just say that first. I genuinely think I understand what you're saying. I do. Like if we were in a room together, I'd probably be like, yeah, all right, I get what you're saying. But it doesn't change the fact that like there has to be something that propels that forward. And that's why I don't think you're going to see it unless there's a massive outlier event. And the events that people keep looking at are the two outlier events. Like they're not looking at the general one. So, well, and that's a whole nother question. Tactical wedgie. Now we're putting on some tinfoil hats because then we'd have to look at like, are these events naturally occurring events, or are they some kind of grand, opera being conducted by some secret organization, in the government? I don't know, man. Like, if anything, like I would think that you guys would be on board with what I've been saying is like I've been talking about the nature of this as like, hey, we could run up to 14 and then crash back down to 3. That's a big deal. That's a huge correction. I mean, it's a big travel distance. If anything, you'd look at that and say Booksy's got the tinfoil hat on already. He thinks that there's somehow going to be some kind of reason to go down there. I don't know what that reason is. Maybe it's dilution. Maybe it's nothing. Maybe it's a market correction. Don't know. Maybe it doesn't happen. Maybe I'm wrong. You know what I mean? Like, it's just a lot of... Like, I think that the chart helps to inform ideas that can basically erase the need to worry about. I've generated a lot of ideas that go way beyond what might be considered common sense based on the news. Like if the handling of the news was all that mattered, it'd be really hard to predict any kind of moves. So looking at like big market moves, like back up to 14, that seemed like an obvious thing to me, but you're waiting on a justification for it. And then we get back to that argument about, are we really just generating events to kind of justify the market moves? I don't know. Maybe. Or is it reactive? I don't know. But I think that the market already reacted pretty strongly to the rate cuts. It was a year-long sideways low. We had people screaming that it was going to dump back in 2022, and it did, but it didn't go as low as people thought it was going to go. And then people were screaming it was going to continue to dump into 2023, and it didn't dump. And meanwhile, your institutional players are like trading a bottom like a bottom, like a retracement, and then they're moving on. You know what I mean? It's like by overcomplicating it and kind of theorizing this or that, you just kind of miss the big picture. Like right now, the big picture is, yeah, there could be a market correction. There's room to come back down and test previous all-time highs and supports. There's always that, and I think that's reasonable. I remember, like, I'm not pointing any fingers, but I remember Dave Marino. Looking back on it now, I think it's silly, but I didn't recognize it at the time. He was looking at the all-time SPY chart or something, and he was like drawing like a fib on this parabola, and he was saying like this parabola, I haven't talked about him in a long time, and I don't mean to, degrade his work or anything, but like he had drawn this fib on this parabola. I think it was him. Maybe it was somebody else. I should have just said a random YouTuber's name. Anyways, it was some YouTuber. I'll just say that. I don't know if it was him. Maybe it was. But he was saying that, like, look at this parabola. It's going to have this massive pullback. You can see it. It's been going parabolic. And then it's going to dump like 50%, come all the way back here to these old levels. And what he was looking at was he's looking at a chart that didn't adjust for inflation. And later I went back and I looked at the inflation adjustment chart, and it's much more linear. It's much more like a trend. And the one that's not inflation related was just like this parabolic move, but that doesn't account for like your spending power, and that's a problem because a dollar went a lot further back in the day, and now a dollar is worth a lot less. That's really significant when you think about supply and demand. So the idea of it being parabolic doesn't really make sense because you're not relating $1 in 1930 to $1 now. It makes no sense to do that. But that's what a lot of people were doing again back in like before we had this big turn down. It was like everything had to be the most extreme it could possibly be. And I'm like, yeah, but you had adjusted a non or for an adjusted doing an inflation adjusted chart, it doesn't look like that at all. It completely destroys the setup. So it was just strange because it's a lot of it is perception, and it's like just because a possibility exists doesn't mean you're going to take it. You know, we've seen that on AMC plenty of times. There's a lot of possibility in AMC. It just doesn't go there. It doesn't react the way you think it's going to react. It doesn't take that route. And I think that you're waiting for that perfect kind of house of cards moment, and it has to do certain things to get there. So I don't know. It's a good conversation. I say I don't know a lot because I don't know everything. And there's probably some things that I'm missing, you know. And it's time for me to eat my lunch, so I'm going to head out for lunch. There's a gravity right here at 2310 on GME. It makes sense. Again, we're kind of waiting to see if it goes low. It may go a little lower, or if it ranges here. Same with AMC. It's kind of right where it could be on like the final pocket. It came below that support at 474. Very much could be that this is like a bottoming action right now, but those early trajectories we're still pointing to 465, so that's important to note. Like 465 was technically where they looked like they were going. I do see what appears to be like a breakout on RSI, so we'll see what happens. If this is a reversal right here, this could be very well the spring. I know it sounds silly to say that kind of stuff right now. You might be like, no way, not happening. I'm being genuinely serious because I think it'll start happening and we won't even know it's happening until it's like already happened. You know what I mean? Like that's the way it typically is with AMC. It's like you think it's going to keep going one way and then it's already making advances. So I'm just going to be watching really carefully the creeks that we do have. I've mentioned it before. I did it earlier this morning, but by the time it gets back up to 496 again, there's really no reason to think it's not breaking out. Like at that point, it's back above the creek and the support. So if it can find an SOS locally above 495 here, around 495, that to me is it. I mean, it should be a reversal. So especially if it comes from where we are now. Y'all, this looks like another, I hate to say it, but it does look like another little micro iteration of the same thing. And it's right there, you know. It could be it. Like I hate to say it, like sounds like it's really anticlimactic. I mean, maybe we get the last drop. Maybe it forms something bigger here. I don't know yet. We'll find out. This is a tough one because it always looks like it until, you know, it isn't. But I have to just call it for what it is. Right now, totally could be we might actually be experiencing I feel stupid saying it because I know what y'all are thinking is like, nah, it's going to keep going. Well, yeah, like I can see it. I could see how you could like bounce out again and come down again. But I totally am just looking at this like, technically, if this comes back above here and finds support, like right now, it could potentially be done. And we would all be sitting here waiting for another drop, and it may not happen. It's just the nature of where that is. It's right where it potentially could leave. Like if it crosses up above to like 480 and comes back to 474 and finds support and then jumps again, it's kind of just advancing. And if you're going into that SOS, then that's it. There's no other, you guys are like, what about these, you know, crazy, yeah, I mean, I guess that's Yeah, I guess that's the big danger. I mean, the only other thing that could maybe reverse it is some kind of crazy upthrust. But that's why you kind of watch and see where those supports are. Once you have that support, you don't want to lose it, you know. So you want to stair step out of here, not just race up and dump. That's the anomaly, right? The head fake. Like, oh, we've been getting all these head fakes, Booksy. What if we get another one? Then we get another one, you know. I will come back today if we see something happen. I'll come back for the last hour if we see this kind of build out. I genuinely don't think that we're not. I mean, I kind of feel like we may end up just kind of coasting here into close around 475. But if you get that move out and it comes back down, that'll be really important for tomorrow. It could be, again, a significant reversal. If you're looking for something else, look no further. Like, this is what a final move could look like for AMC. Genuinely believe that. Like, this is essentially what a final move often looks like on AMC. So, like, we'll wait it out. I don't want to make it like the boy who cried wolf. And every time we see this, it's like, oh, it could be now, it could be now. So I'm warning you. I'm trying my best to warn you verbally. It could happen again down here. All right. You could have another lower iteration of this lower. So I'm trying my best to not sound like that person who's going to say every single time. But this motion right here, that's the motion I want to see. This little range right here is what I want to see. So I'm waiting for that. And it's got the divergence. It's there. It's still there on the 1 hour. It's probably still there on the 30-minute. I'm telling you guys, I know it sounds weird because you're like, man, it looks like garbage, but it's very possible. I hate that because I hate the idea of it being like a giant upthrust and then diving low again. I just really, really don't want that to happen. But it's very possible, is what I'm trying to say, that this is the end. And not the end forever, but like for this range, it's like as close as we've come. Any day now. And I will conclude with this in case I don't come back today. Earlier in the stream, we did a couple different interpretations of this setup. One of them seemed very likely that you would be in an SOS around the FOMC date, which is in the middle of the month, basically 2 weeks away, almost exactly 2 weeks away now. So that was one option, was it was a little slower. The other was a little more like May, where it just kind of early advances kind of rips quickly. A lot of that would depend on what happens this week. Last time in May, we advanced in like 2 days, which is kind of inconceivable. It does not happen like that almost ever. So if you're expecting that to happen, it is definitely an anomaly. It did definitely happen, but I don't know how predictable that could be. I think that's a very difficult one to say, estimate, you know. I don't know how you could do that. So I can't do that. So right now, my best estimation is that potentially you could be in that SOS period by FOMC. And I think that's the best case scenario. I hate that it's come to this. I hate that it's taken so long. I really do. At this point, you might think, like, why are you still thinking it could run ahead of it? You know, it's not done that so far. It doesn't make any sense. You've been saying that forever. I know. Totally get it. I think it's like a Schrodinger's cat kind of thing. Like, it's just an unknown to me. I feel like I don't feel like that door is closed yet. So I know that it's been tiresome to hear me say it. That, hey, it could do this. Well, yeah, Booksy, but it's not doing that. Aren't you tired of saying that and being wrong? Yeah, I am. but it's like you got two doors and they're both open, and there really hasn't been much except for that, maybe this up thrust here that really shut the door. You know, again, we've only had these two kind of major attempts at potential advancements. So when they fail, you knew you're going to go down low, and then you've got a potential for a spring. So it's like a third potential event, and it's just not. I don't know. If the goal was to delay it, they've done a pretty good job. And maybe I should have said that, and I did to some degree. I kind of, when we first worked out the iterations on August 12th, that was weeks ago now, I said, you know, there's a way to get to FOMC without breaking the range. And a lot of you probably said that's probably what's going to happen then. And I'm just sitting here being optimistic about it. Yeah, and that is generally what happened. So let's not make a decision. And I don't know, but I still think the door's open. Silly as it sounds, you're like, it's 2 weeks away. That's all we need. AMC doesn't need more time. It generally takes like 2 weeks to run up, maybe 3 weeks. I think the longest run we ever had was like 28 days or something from the very bottom, and that was the January 2021 run. So it doesn't take that long. Most of them are only like 2 weeks. It may make more sense in some ways to chop here and not advance right away. Stay low. I don't know. Your guess is as good as mine for that. So I will come back if we see this support build out, see some fireworks. Otherwise, I'm thinking we're going to land somewhere between 474 and 465 today. And that'll be okay. There's a lot of time left in the day, 2 more hours. We do have a strong divergence. I think this is very significant. If I'm a short-term trader, I'd be watching that divergence because that could be a really good money maker if it holds. That's like what happened on GME down here. That divergence led to a pretty massive, and it was lower. I mean, this is a 30-minute chart I'm on, but it was still a 23%, 24% move. So, yeah. Man, if we got a 23, 24% move from where we are now, that'd be pretty high. You know, it's your SOS kind of move, isn't it? Yeah, 24%. It's like right up there, 585. Yeah, let's just copy and paste the GME move. Probably look exactly the same. Chop up, chop up. Done. GME also has earnings coming up, so there's that. It's a little different. Yeah, I genuinely think it could be today. It only seems silly if the expectation is it has to get down below 465. I think there's a strong chance that's the goal. So that's why I'm like hesitant to say like it's definitely going to do it. I think there's a strong desire to get to that sub 465 level, but technically, like again, just looking at this setup, if it starts jumping creeks here and it finds support, that could be it. I wish I could tell you with absolute certainty. So I'm not in a position where I'm like panicky, but I'm very like ready to go, you know, like this is a exciting possibility. If it doesn't happen, then what you'd probably see is some kind of rejection around the 470, upper 470s, and then you'd come back down. And then essentially you'd see the exact same thing play out here. But you'd see it like, and I don't know exactly how they do this, but you probably see it like down below, like in a very small version of this, like this maybe. You know, it's just a thought. It probably wouldn't look exactly like that, but you see something similar, right? And then even again, it could do it again lower and be like in the 450s even. Because what matters is like, where is the floor? If the floor is at 465, then I could totally see how this could dip in one hard sell down to 465 and basically do the exact same thing we just saw. And then it could get a slightly lower spring action down below here. And then this ends up being later in the week, you know. So I had early in the day, I don't know if I deleted it or what. Early in the day, I talked about that possibility of coming down and doing it again. This is basically what I meant. So we will see. Y'all are like, that looks right. Well, it's because it's the same general thing, just doing it again faster. But the goal of this first one was just 465. So, you know, in theory, even in this, it's like I'm being really kind of over the top with it. In theory, it could just be right where it's at. Have a slight dip, come back above, and just push down slightly to get to that 465. That would be the general motion either way, if it hooks. So makes very little difference to me personally. I'm just kind of watching. And right now, I guess what I'm trying to say is right now, I think it's already leapt over one of the creeks, so I'm not sure. I mean, if I'm off, then it's this guy. You could just drag it out further. It's right there. So there's a lot going on. So yeah, I really do. I think if it's not today, then the delay is very easy to argue that you could delay until like Friday. I hate that because it just always is like, great, now what? Look, I'm a big fan of the Wednesday move, so I would love to see it move Wednesday, be like down a bit today, and then tomorrow like take off. I love the Wednesday moves. I do. We don't get them all the time, but usually that's a really good sign. Midweek, if we start getting bullish action midweek, I like the Wednesday move because that, again, Mondays, Tuesdays tend to be the higher volume days. We always kind of take that for granted, and then it usually dies out by the end of the week. So you get these big moves and then it dies out. It's not fun to watch. But I like the Wednesday. I like the idea of a Wednesday move, so I wouldn't mind if it came down again. That's what I'm saying. Somewhere between like maybe the 465 area and 474 today, and then I'll see what happens. But it definitely could be a good setup. So, yeah. So GME taking that lower route. That's okay. So one of the possible supports was like 2287 area. That's right where we are now. The next one down is 2247. So maybe just say 2250. Not a big deal. I know it's sucky to see it go really green and then see it come back. But GME's had a big move 24% to the upside. It breached that level. That's important. It tested that liquidity up here. It's really important. It just needs to find its footing. There's a lot of places that could do that right here locally, and that's what we want to kind of aim for. And it looks good. Yeah, I know it's a little crazy. I'm just saying, it looks like it could be that. It'd have to come up pretty far, though. It'd have to come up to this top. Yeah, whatever. All right, so I'm gonna put. You guys are like, what's wrong with you, Booksy? I'm gonna put a alert at 495 now. If it hits 495, I'm pretty excited. Right now, I don't really care about this particular portion until it works itself out. I just want to see what happens. Man. Yeah, this is really close. And I really like this bottom right here. I can see it working. Like, I can see that potential there. It's just got to make the jump. Even if it pushed down again, I'm looking at that 1 hour RSI, like, that looks really nice. I'm looking at that as a possible phase B top with a spring. Regardless, confirmation's pretty far up. It's up here around 490s, so you wouldn't be like hyper bullish or anything unless it found that support here. Kind of has to go back across the range, odd as it may sound. Otherwise, you are just trying to catch a falling knife, you know. You don't want to do that. This guess might have been pretty accurate. I guessed this was going to be here, but I didn't know. It's kind of funny. It might be accurate. That's a big guess. And then this also, this was that parallel from the bottom. This seems to be interacting with this right now. This guy coming up. If we're going tomorrow, it's going to be a really, really, really fun week. If we get this set up, finished. If not, I don't know. It could be pretty much a dead week. I say that every week, but in this case, it's like the end of the end, you know, like the end of the rope, I guess. I don't know where else it would go. I got nothing else. I really don't. Like I told you guys last week, I felt like, I was like, dude, if it goes below 465, I have no idea. The only other thing I have is really low. Like, it would just be me guessing about where it's going to stop. If we bottom out this week, I don't want anyone coming back and saying that it was all random and nobody knew and all this other stuff, okay? I don't want people doing that. We've been monitoring it closely. We've been putting the work in. I don't want it. I don't want to hear the naysayers saying that we got lucky or something. Okay? It's not fair. We called every action as we saw it. We called this fake breakout here. Not fake, but we called this, it was a real breakout on August 15th. It just didn't cross up again. We called that M cross what it was, came back down. Called that head fake what it was as an up thrust when it came back down. You know, like, we've been doing the due diligence to make sure that we're not calling stuff too readily. So now we're at a position where maybe, you know, but we got a lot of people that grumble a lot. And I know that you're frustrated. But it's not me versus you, you know. It's all of us versus price action individually. So you got to trade smart, keep your head about you, pay attention, and be all right in the end. I don't want to be in a position where, you know, we see things change and then we don't call it out. And that's the big thing. It's like, got to make sure that you're always paying attention because things change, you know. You might have it mapped out, you think it's perfect, and then you get to that point and it just doesn't do what you want it to do. You got to make sure you're able to say, yep, it didn't do what we wanted it to do. I mean, so we're in the same situation now. We got to make sure that, hey, this looks like a potentially good place to be this week, but let's see it do what we want it to do. And when you trade, you assume the risk, right? So you you decide where you're going to get in, what that's going to look like, where those support levels are going to be, where your stop losses are going to be. You got to make sure you're always got a plan. And I can't do that for you. I can tell you where I think confirmations are here and here, up above 475, up above 495 locally. Those are the first ones. But the rest of it's, it's you. You have to decide. You got to decide if that's where the risk is, where you don't want to play anymore. So give it your best today. I will be back if we see something really good. And if we see something where it just comes above and finds support, that's great. But let's just wait it out. I'll just come back tomorrow because that'd be a really nice move. But I'd still like to. We would have to wait till tomorrow anyways. So we'll just wait it out. Unless we see some kind of crazy after hours price action, which, I mean, it happens. It does happen on AMC. I hope you're right. I don't know what your name is. It looks Korean, but $4.95. I'll be back. Yeah, absolutely. The problem with the current setup is just the uncertainty of it actually being finished. The nature of iterative moves is that you often think it's done and it's not. And then usually it is very sneaky. So you get to that last few bits and you're like, I think it's done, and then it's not. Or you think, I don't think it's done, and then it is. Because it's hard to know, like timing wise. And that's what I was saying really early in the stream. I said, I don't think I'm smart enough. Like I know where sometimes where you can measure out it. This one was already finished. So this was iterating downward until about 30 minutes ago. But that's as far as I could go with it. They pinpointed 465 and then it passed over that. So now it's like, I don't know. Timing wise, I don't know. And I said the same thing about this cross here. Technically, there's a potential that this goes down until kind of Wednesday here in this low, but it's not possible to know with absolute certainty because it's really just representative of a potential wave bottom, but you don't know where the bottom is. If it's earlier or later than that, you wouldn't know. Like it's just not, enough of a signal. So I've got ideas about that. This week is the low, and that's it. And that's about as far as I can go. So I'm waiting for those confirmations. And it's supported well enough here. I mean, I don't really think you need to, again, I overthink some things here, but just look at it. Yeah, this divergence could be erased, but it's still there. It's on the 6 minute. It's still there. It's on the hour chart over here. There's clearly been a pickup in volume down here below 482. It looks like it's ready to turn back around. That should bode well for everybody who's bullish on AMC. All right, guys. I'm heading out. We'll see y'all later if something crazy happens. Good day today. Chill. Good analysis on the charts. Good talks about the market on the whole. I haven't really finished this IWM chart, and I didn't really want to go into it too much. But if you want to take a peek, you can take a peek at it. There's nothing really to say about it just yet. This was more or less kind of expected today. It didn't really seem like it was having a strong advancement, so topping off. We may end up with some kind of major chop here before the end. But the S-curve is very similar to the first one I did, which was terminating on like the end of September. So just so you know, like that 250s area was like end of September, which would be after FOMC. That did not change from the other chart. I tried to change it, but it didn't change. You guys are, you tried to change it. What I mean is like I redid it and I couldn't find like a much later date. So, I mean, if it's later, but I can't find it. So I don't know where it would be. But yeah, you can take a look at it if you want to take a look while I close down the stream here. Will you catch the open tomorrow? Definitely. Yeah, I didn't catch it today. I was really tired. I'm not going to lie to you. I slept in. I could have caught it, but I woke up gently and my wife was home, so we hung out for a bit and just talked about vitamins, vitamin K. Fun fact, just so you know, apparently spider webs are really high in vitamin K, which is good for blood clotting, helps your blood not be so runny. And also it's good for your bones, which is also weird. So it's good for people who have osteoporosis. So if you have osteoporosis, I guess you can go around and eat spider webs. I asked our Alexa bot this morning because I was like, why is, what is there nutritional value in spider webs? Because one of our cats was trying to eat a spider web and I couldn't figure out why he was doing that, or why he would do that. I still don't know why he did that. I made him stop doing it, but I found out today that they have high amounts of vitamin K, for whatever that's worth. Anyways, but yeah, I'll try to be here on open tomorrow. So, see y'all.